anytime soon. Because the fact of the matter is, if the market keeps betting the Fed is going to turn, financial conditions are going to stay easier. And that's going to undo a lot of the work that the Federal Reserve was trying to do in the first place by tightening things up.
Fascinating to get into this with Bharat Ramamurthy. He's free to speak now.
He is.
I love this. Former Deputy Director of the National Economic Council in the White House. Bharat, welcome back to Bloomberg. I wonder your thoughts on everything that Kayleigh just mentioned here, because the Fed is obviously looking at this pretty closely. I wonder how worried you are, or you may be, about the Fed starting to cut too early.
Well, I think the best way to look at the data is not necessarily in month-over-month increments, but at least over a 3-month period. And I think if you look at the annualized rate of headline CPI over the last 3 months, it's 2.2%. So that's basically at target. And I think that accounts for the fact that there's a lot of housing disinflation in the pipeline that's not fully reflected in that figure. So if I'm at the Fed, certainly if I was at the White House, I'd be looking at the longer averages here and feeling pretty good that inflation was pretty much at target and on its way to at or below target over the next few months once the newest housing data gets fully incorporated into that data. So as for cuts, what the Fed is going to do, I think what the Fed is likely to do is keep rates where they are, including into early portion of next year. I think, to be honest, what I think the Fed should be doing is getting out ahead of things a little bit and considering rate cuts earlier next year, just given the fact that we know there's always a lag for that monetary policy to take effect. And you don't want to see a significant spike in unemployment before those cuts start to come. But I do think that it's unlikely that the Fed will be cutting early next year.
Leaves the White House, can comment directly on Fed policy.
Something
that you can't do when you're inside the building. Bharat, the idea though of the Fed cutting, does that imply that you think there's going to be some real softness showing up in the economy that they're going to have to address? Does that go against this whole idea of a soft landing? Because if the landing is soft, why do they need to cut?
Well, I think that's precisely why they're not going to cut early next year. I think that the Fed is likely to wait until they see evidence of a significant labor market softening before they start to cut. I just think that may be a mistake in the sense that we all know that monetary policy operates with lags. I think that given the trend on inflation, the Fed has largely won its battle against inflation. It's good news. I think monetary policy and fiscal policy worked together over the last few years very, very well, and we've largely achieved a soft landing. Now is the time to start making the pivot away from the highly restrictive rates that they have towards more neutral rates. I think that should start early next year. I just question whether this Fed, which I think is very worried about inflation and its reputation on inflation, is likely to make that pivot as quick as it should.
What are the conversations like inside the White House, the ones that we don't hear, Bharat? I don't know if you can tell me too much about it, but look, Donald Trump used to tweet directly at the Fed chair asking him to move interest rates. We now have the opposite, and we're referring to this with every question that we ask you here. The White House does not comment on the Fed, defer to the Fed, don't get in the middle of it. But certainly there are conversations behind closed doors, and I wonder how this president and his economic advisors feel about the path that this Fed has taken, knowing that he's going to be running for re-election in the midst of these conditions you're describing.
I think this president honestly takes it very seriously to respect the Fed's independence, and I think that filters down into his team. And of course, senior members of his team, like Secretary Yellen and NEC Director Brainard, came from the Fed, and so I think they also have a very healthy respect for the Fed's independence and the important role that plays in U.S. economic stability. That said, I think that there has been a significant amount of progress on inflation. I think the concern would always be that the Fed starts to pivot too late and unemployment starts to accelerate before the Fed can start cutting. And then because of the delay in that taking effect, it's too late and you're starting to enter a recessionary period. My hope, again, the data we have right now suggests that the economy is in a very strong position. There's nothing that I'm seeing right now that would suggest that labor market softening is going to happen over the next few months. The question is, what's going to be happening 6, 9, 12 months from now? Because as the Fed is making rate decisions today, that's really the time period where they have to be looking at in terms of the effect of that decision. And I'm hoping that the Fed is looking ahead a little bit. And in order to fully achieve this soft landing, you need to make sure that you pivot to a more neutral rate in advance of any labor market softening.
Well, on the subject of labor market softening, in the statement that the president put out today in reaction to CPI, he noted that inflation has come down to 3.1% at the same time that the unemployment rate has remained below 4% for the longest stretch in decades at this point. And that statement went on to say, I know many Americans still find too many things unaffordable. And Bharat, we've talked about consistently this White House not getting credit for inflation coming down and the economy hanging in there. And if you do start to see that labor market softening in a more material way, is the clock against the side of not just the president, but of the candidate, Biden?
Yeah, look, I think the question of what the economy is going to do over the next 9 or 12 months as we approach the presidential election in many ways is going to be the key question electorally. You know, my hope is that we continue to see inflation at or near target over the next several months, and you continue to see robust consumer spending, robust business investment, and as a result, you know, steady economic growth. I think that there's a pathway to see all of that. It requires the Fed, like I said, to be a little bit proactive. It requires us to avoid any significant headwinds or unexpected turmoil like we saw when Russia invaded Ukraine and disrupted international markets for oil and for wheat and for other products. If we can dodge those types of things, I think that there's a lot of optimism. I have a lot of optimism about where the economy is going to be over the next 6 to 9 months. And my guess and my expectation would be that if we see that, that's going to be beneficial to the president. And I think he'll start to get more credit for managing a very strong economic recovery, one that's much better, frankly, than almost any other leading economy in the world.
I want to ask you about some of the warnings that we received months back. This is late summer going into fall, Bharat. I'm sure you remember the resumption of student loan payments. We were told would be a significant drag on consumer spending. The child care cliff, we went over it, impacting potentially thousands of child care programs, COVID-era funding that lapsed. We were told millions of families could be impacted. I could add the expanded child tax care credit. What happened to all of these potential threats? Were they not real?
Well, I think that in the case of student loan repayment, yes, we've seen when it comes to actual student loan borrowers who are subject to repayment, we have seen a change in their behavior, which is what the White House was projecting. I think that in terms of its macroeconomic effect, it has been fairly subdued because, to be honest, we have a very large economy, and something that may end up affecting 10 or 20 million people at the end of the day isn't necessarily going to be of macroeconomic significance. It's still very impactful for those 10 or 20 million borrowers who are actively in repayment right now and who have gone from paying $0 a month to, in some cases, several $100s a month towards their student loans. So I think we shouldn't diminish that, but I think it's also fair to say it hasn't had a massive macroeconomic effect. Frankly, the White House was never projecting that it would have a massive macroeconomic effect. On childcare, that funding runs out at the end of the year. And so the real concern is come January, February, March, once you see the impact of that funding being withdrawn, are you going to have lots of childcare centers across the country either pulling back on service or shutting down entirely? And what's the impact of that going to be not only on childcare workers, but on all those families who rely on access to somewhat affordable childcare? So I think in that instance, I think it's vitally important that Congress step up and avoid that cliff and provide funding, because we could have real serious labor market effects, labor supply effects in the spring of next year if that funding is withdrawn.
Yeah. Well, on the subject of funding, Bharat, obviously there is an ongoing conversation of funding, not just as it relates to childcare programs, but just overall top-line figures for the U.S. government. A real argument on the Republican side that more fiscal discipline needs to be exercised. But you're even hearing it, and this ties back to the path of interest rates, from Treasury Secretary Janet Yellen, who earlier today was talking about how she does think inflation can get down to 2%. She went on to say, though, in her remarks, that persistently high rates could imperil U.S. debt sustainability. It comes back down to not just a monetary policy question, but a fiscal one as well. Bharat, how worried should we be about that farther down the line? If we're talking about, sure, a Fed that may take rates from the high levels at which they are now a little lower, but we're still talking about a much higher interest rate regime than we were dealing with just a few years ago.
Right. I think the key question in all of this is debt sustainability. In other words, what percentage of your GDP are you paying towards your debt service? Obviously, there's two variables there: the size of the debt and the interest rates that debt is at. Our hope is that both of those will come down over time. The president has proposed in his budget a $3 trillion reduction in the deficit over the next 10 years, with a mixture of some spending cuts and some revenue increases from those at the very top and from very large corporations. I think that the story of the last 25 years, with first the Bush tax cuts and the Trump tax cuts, is an enormous reduction in revenue, primarily through cutting taxes for the rich and big corporations. And I agree with Secretary Yellen. It's not sustainable to maintain those rates and continue to fund the types of investments that we need. The solution is not to make huge cuts to entitlements or to make huge cuts to discretionary spending programs. The solution, as the president has proposed, is to increase the amount of revenue that we bring in from corporations and from from wealthier individuals. In essence, to go back to the pre-Bush era tax cut rates. That alone would get us most of the way there towards addressing the fiscal issues that you have. So obviously in 2025, there's going to be a big debate about tax policy on the Hill because a lot of the individual provisions in the Trump tax bill expire that year. And I think it's underrated the extent to which 2024 is going to be an election that has an enormous influence on the direction of tax policy in the United States.
That is going to be a grand debate. I'm looking forward to hearing the arguments for it, because when I say the word revenue on the air, I get hate mail every time, Bharat. We've only got a minute left. Should we be worried about a downgrade from Moody's if this budget debate doesn't go well next year?
Well, no disrespect to Moody's, but I think what we've seen from previous downgrades is that it doesn't have much of an effect on market perception. I still think that there's ample demand and respect for U.S. Treasuries. Unfortunately, Moody's is correct about one thing, which is that extremism from Republicans, which have caused multiple near misses on the debt ceiling, has done some reputational harm. Again, this is solely caused by House Republicans who have taken us to the brink of default over and over again. If we could avoid that, that would be great. But I think at the end of the day, people know the United States is good to pay its debts, and U.S. Treasuries are the most desirable securities.
He's not losing sleep. Bharat Ramamurthy, great to see you. Come back and talk to us again soon here on Sound On. Alongside Kaylee Lyons, I'm Joe Matthew. We're going to dig into this visit from Volodymyr Zelensky coming up next. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 221 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are pushing higher with the S&P 500 index once again to the best level of the day. S&P right now up 12 points. That is a gain of about 0.2%. The Dow ahead of the Fed decision tomorrow up 113 points now, up 0.3%. The Nasdaq Composite Index up 65, up by about 0.5%. Again, the S&P higher now by 0.3%. 10-year yield 4.20% with a 2-year 4.72%. Gold down $1 the ounce now to just about $19.80. That is a drop of less than 0.1%. West Texas Intermediate crude 68.46 a barrel. WTI today down by 4%. So again, recapping, U.S. equities are moving higher. Walgreens Boots Alliance shares down 0.5%. Sources tell Bloomberg Walgreens is reviving discussions on a potential exit from its international arm nearly 18 months after a sale process was scrapped. And State Street is laying off 1,500 people before the end of the year. This, according to the Boston Globe. State Street shares, they're up now by 0.4%. Again, recapping, stocks are higher with the S&P pushing higher by 11 points, up now by about 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
The big in-person ask by President Zelensky happening today is right in the middle of a long day in Washington, straddling both ends of Pennsylvania Avenue. I'm Joe Matthew in Washington alongside Kaylee Lines. He's really working it here, Kaylee, because this might be his last opportunity to do this face-to-face. Met an all-senators briefing earlier. Had a one-on-one with Mike Johnson, then it's on to President Biden. They're scheduled for a news conference about 2 hours from now. Wonder what time that will actually start.
Probably late. This is the White House after all, and that's tends to be how things go. But yes, the White House, of course, firmly on the side of Ukraine, of President Zelensky, of this effort to continue providing U.S. funding as it fights its war ongoing with Russia. At the same time, what you're hearing out of Capitol Hill, specifically a lot of those Republicans coming out of both meetings today. Yes, we want to support Ukraine, but it is also about the border here at home, and without border security, this Ukraine funding puzzle is not going to be put together. And it seems everybody is still singing that tune. Volodymyr Zelensky didn't seem to change any minds on that.
Well, it's really interesting because Mike Johnson gets to the microphones following his meeting. Everyone wants to know how the meeting went, and I guess it went well. He reiterated his support for the cause in Ukraine. He did not reach first for the border when talking about what needs to change here, what needs to happen for Republicans to get to a yes. Here's Speaker Johnson earlier.
I have asked the White House since the day that I was handed the gavel as Speaker for clarity. We need a clear articulation of the strategy to allow Ukraine to win. And thus far, their responses have been insufficient. They have not provided us the clarity and the detail that we requested over and over since literally 24 hours after I was handed the gavel as Speaker of the House. And so what the Biden administration seems to be asking for is billions of additional dollars with no appropriate oversight, no clear strategy to win, and none of the answers that I think the American people are owed.
Okay, so he did get to the border later on, but is it strategy that is the main concern, or is it an agreement on the border? Because it doesn't look like that's happening anytime soon based on what we're hearing today.
Well, I wonder if an agreement on the border is enough to get some of these Republicans to vote yes, enough to actually pass a supplemental spending package through. But for all of the Republicans who are just questioning whether or not Ukraine should continue to get funding at all, absent any other kind of wheeling and dealing on other policy priorities, to them it is about the lack of strategy and a lack of clarity, perhaps, about all of the ways in which this money is being used. Perhaps therein lies the difference.
Sure. If your guess is good.
You can see me on YouTube. I said that with a shrug.
Yeah, that's right. Join us on YouTube. Search Bloomberg Global News. You'll see Dad in a minute, too. He just walked in the room. Mitch McConnell says we're going into January now.
Yeah.
So that's you just saw this. A border solution very complicated. We're not there yet. That's not news, I guess.
He says he thinks it's practically impossible to craft and pass a supplemental through both chambers before the holidays. And then he noted that Speaker Johnson says he plans to have the House leave later this week. So even if the Senate stuck around,
they're out.
it's not going to pass the House, therefore it doesn't get done in 2023.
He spoke from the floor earlier today, Mitch McConnell making the case for funding in Ukraine.
Our Ukrainian friends' cause is just. And if the West continues to stand with them, they can win. But let's be absolutely clear, Ukraine's cause hasn't always been popular here in Washington.
Let's get into it with Nathan Dean. Yes, Dad is with us here at the table in Washington, D.C., senior policy analyst at Bloomberg Intelligence. Great to see you, sir.
Thanks.
You're not running odds on supplemental, are you?
No, we're not.
Is it just too complicated to get there? It's like a five-way intersection to get to a final product.
Yeah, I mean, there are so many different things to this. You've got the Ukraine aid, you got Israel aid, you got border security. There are so many different pieces of the puzzle. And then we have this government shutdown threat coming in January. But what we can tell our folks, our clients, is that, that we do think that there are a significant amount of Republicans who want Ukraine aid and that it has to come with border security. I don't think you're going to get one without the other. Yeah. Now, we have not seen this political pressure coming from both the deadlines of the holidays and also the political pressure of getting things done. It's not forcing them to actually come together and do it right now. So you can push it on to January. And that's where, with Senator McConnell's statements, that's where we think this is headed. Ultimately, though, for us, it's the Ukraine dollar amount that we care about the most in terms of how much money is going into funding. Because if you get that $43 billion number, you're looking at a 1 to 2% revenue increase for those publicly traded contractors that would benefit from that. So that's the most important thing we're looking at. But ultimately, this is going to go to January, and we're going to be talking about all this right before the government shutdown.
So you think the real market risk here is in kind of that those defense-oriented specific companies, those stocks in particular, versus wider geopolitical? Because if you listen to President Zelensky on the Hill, his argument that he's making is that if you let Russia win in Ukraine, Russia will not stop there. And in theory, that would just heighten geopolitical risk around the world, right?
So it's really, are you in a short-term investment or a long-term investment? Short-term, if you're looking for something just, in terms of trying to calculate profits and revenues, so forth, it's that Ukraine dollar amount. But the geopolitical matter is extremely important, as you noted, and it just goes to this uncertainty of 2024. I mean, there's a lot of things that are going to happen in 2024.
Yeah.
You've got a war in the Middle East. You've got a war in Europe. You've got all this geopolitical tensions with China, and it just adds to the angst. And so I think what the traders are looking for right now is we want our 2 to 3 week window that we want to know what's going to happen there, but then we're going to take this, hesitation to get Ukraine aid, and we're going to throw it into our year ahead outlooks, and then just always keep that in the back of our mind.
Well, this is interesting because we've discussed before that the bulk of the majority of the $60 billion would go to U.S. defense contractors, would go to places like Alabama, Georgia, and Texas. You would think that actually would be attractive to most members of the House to bring home the bacon like that. But when you hear from investors, they're piling into Lockheed, they're piling into Raytheon or Northrop to try to get a piece of what's happening here as the world kind of arms up for what's going to happen next. If you get a change in administration in 24, is that out the window?
Well,
Donald Trump's not going to continue this in Ukraine.
Historically, Republican presidents have been very good for defense contractors.
Right.
But, there is a difference between the reality and the perception. Banks did extremely well under President Obama. The idea here is President Obama was tough on the banking sector.
Sure,
it really just depends on what Congress does, because the power of the purse starts with Congress, and a lot of congressional, both on the Republican and the Democratic side, have ties to the defense contractor industry. So we're not so much concerned about the election there. But ultimately, what we're trying to feel out at the moment is what gets done in January that we can understand from a certain a certain perspective in terms of Ukraine aid, the government funding, and so forth. The worst case scenario for us is if nothing gets done, and then we get to the January 19th, and the headline risk just makes markets to be very spooked and so forth like that. Remember, ultimately, when we've talked about government shutdowns before, they have very limited impact on markets. But this idea of just Washington can't get their act together, that's one of the biggest risks in 2024.
And if they can't do it on the must-pass legislation, Nathan, are they going to be able to do it on anything else, any of these other initiatives that we've seen started and not necessarily finished? Crypto, marijuana banking, basically anything else?
So think about 2024 in terms of tiered timing. So like you have the first tier, not tiers, but like segments. You have the first segment. where things will happen in the first quarter of next year. You know, on this Ukraine border security bill, we haven't seen policymakers actually fight for this. You know, President Biden hasn't been really out there. I mean, he's been giving speeches and so forth like that, but he's not in the trenches. So, but the first quarter of next year, the policymakers will be in the trenches. Second quarter of next year, there'll be a lot of political statements, a lot of committee hearings. The impeachment process may be underway, but a little in the way of legislation. And then the third quarter of next year is right before the election. That's when everybody's going to be campaigning, lots of headline risk, but little actually being done. So yeah, the first quarter of next year is extremely important in terms of actually getting legislation across the line.
Does an impeachment inquiry, assuming this happens, it sure looks like it will, slow things down even more? Or are we going to be told that we can walk and chew gum or something like that?
I don't think it's going to slow down because the expectation for legislation is so low anyway to crypto and safer banking perspective. You know, we don't have good odds on either of those happening next year. And so, you know, if impeachment inquiry does happen, the one thing it will do is make people mad and make people upset.
But that can make debates more difficult on everything else, right?
Exactly. But when we had little expectations for things to happen in the first place, you're going from a bad position to a bad position. So I think if the impeachment inquiry comes out after this government funding and all this other Ukraine border issues and stuff, then you're probably in a good position to get things done, you know, that matter. And I'm not saying crypto and safer banking, all these other small stuff doesn't matter, but we didn't anticipate it was going to pass in the first place.
Man, don't make us send Dad up there. That's what it might come to. Great work as always. We are his clients. Nathan Dean, Bloomberg Intelligence. Call him often. I mean, if you have a term, like if I were a subscriber who didn't work here, I feel like I'd call Nathan a lot.
Same.
Maybe once a week, like Tuesdays. All right. Thank you, Nathan. As ever, a lot more ahead with Kaylee Lyons. Let's bring you up to date on world and national news. First, Nancy Lyons has that in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. It is unclear how successful Ukraine's President Volodymyr Zelensky will be following his meetings today with lawmakers and President Biden. It's his third visit to Washington since Russia invaded his country. Senate Majority Leader Chuck Schumer says Zelensky made a convincing argument to lawmakers this morning.
President Zelensky made it so clear how he needs help. But if he gets the help, he can win this war. And he outlined in some great detail, the kind of help he needs and how it will help him win.
Schumer says the U.S. cannot let Russia be the one who wins. Senate Minority Leader Mitch McConnell says the White House, though, needs to get involved.
There won't be a deal until Joe Biden and Republicans reach an agreement. And that hasn't happened yet. I hope that it will, because I think this whole package is important to our country, and I'd like to see it pass.
McConnell says there's still plenty of work to do on the U.S. border before any aid package can be approved. President Biden is warning Israel is losing support around the world as its war against Hamas in Gaza intensifies. While speaking to Democratic donors in Washington, Biden described Prime Minister Benjamin Netanyahu's government as the most conservative in Israel's history and said the prime minister does not want a two-state solution to the country's conflict. UK lawmakers have approved a Rwanda migration bill, providing some relief for Prime Minister Rishi Sunak, who came under heavy criticism for the proposal that would deport asylum seekers to Rwanda. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are higher across the board, and this Bloomberg Business Flash is brought to you by the Jewish Communal Fund. JCF helps you respond to a crisis swiftly. Open your JCF Donor Advised Fund now to secure your tax donation. Visit jcfny.org or call 212-752-8277. Stocks higher across the board, 13-point gain right now for the S&P 500. Best level of the day, up by about 0.3%. The Dow higher by 131. That is a gain of 0.4%. Nasdaq 100 index up 92, up 0.6%. The Nasdaq Composite index up 0.5%. 10-year yield 4.20%. We do have the 2-year yielding 4.72%. Gold down $1.41 the ounce. Little change now at $19.80 the ounce, down less than 0.1%. While West Texas Intermediate crude oil is moving lower, down 3.7% right now, $68.72 a barrel. Netflix is ready to tell the world how many people watch its shows. Today, the company released global mid-year viewer data for every title on its service. It is the first of what Netflix says will be regular reports. Netflix shares up today by 0.3%. Fresh data suggests economic worries pervade Main Street. And with more, here's Bloomberg's Vinny Del Giudice.
Last month's Small Business Optimism Index dropped to the lowest level since May. The outlook remains clouded amid pessimism about sales, earnings, and credit conditions. Hiring plans, however, held steady with labor shortages prevailing in some industries. The National Federation of Independent Business publishes the report. Vinny Del Giudice, Bloomberg Radio.
Boeing says it delivered 45 of its 737 family of jets in November, its largest such tally in 5 months, leaving the manufacturer just 24 aircraft short of its revised annual target. Shares of Boeing up now by 0.7%. Recapping, S&P up 13, a gain there of 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
And we've got news just as lawmakers prepare to pack up and get out of town the end of the week. Headlines crossing the terminal, Kaylee Lines. There might be some movement here and a deal on the border. It looks like the White House is about to get involved.
Yeah, well, at least they're maybe going to try to move the ball. According to the Democratic Majority Leader, Senator Chuck Schumer, Senate border negotiators will meet with the team at the White House at 3 p.m. Eastern time, so just over 15 minutes from now. And what's interesting is Senator Schumer saying that comes just after a Democratic senator from Colorado, Senator Michael Bennet, tweeted out or posted on X, it's time for President Biden and Leader McConnell to come together and negotiate a deal on the border and Ukraine.
That's
so maybe the White House getting involved more actively here.
Just yesterday, we were talking about Chris Murphy, the lead Democrat negotiator, saying on Sunday morning television that that's pretty much where we are.
Yeah.
They may have brought this as far as they can. It's time for the White House to start pressing. Of course, and I don't know if that's at the White House or if the team's shuttling up to the Capitol, Kaylee, but it's a very busy day for the White House as the president meets with President Zelensky. We're going to have some remarks from him likely in the coming minutes as they sit down right now in the Oval Office. But look, whether they get a deal on the border or not, this remains the third rail in politics. It's not going to be easy.
Yep.
And this is partly why the dysfunction that we see in Congress is scaring people a little bit about what we might come into next year. We're doing all this. We're doing abortion, guns, now the border. They will all be in the air in this campaign in 24 and on Capitol Hill.
Right. And what we see time and again is it is very difficult for sides that are increasingly far apart, sometimes sides even within one individual political party, has multiple spectrums. It's very hard for people to come together and accomplish really anything right now. And a lot of these conversations are just getting more difficult and more toxic, honestly.
So this is the scary part of the conversation.
Yeah.
One of the stories we woke up to this morning, picked up in the tip sheets, great work from Greg Giroux at Bloomberg Government, who we haven't talked to in nearly recent enough history. It's about political violence and a group of former congressional members. These are folks like how Bharat Ramamurthy can speak freely now that he's out of the White House
Right.
earlier this hour. They're speaking freely now that they're in office on Capitol Hill, and they're dismayed by what they see, warning of political violence. The number here that we saw was pretty remarkable. The number of former members who have had threats posed to their families is incredible. Greg is with us right now. Greg Giroux, Bloomberg Government. Great work, Greg. How worried should we be about this year ahead?
Yeah, it was a pretty grim, bleak, even alarming report from these members of Congress, former members of Congress. Almost half of them reported, at least somewhat frequently, receiving threats of violence against them or their families while they're in office. And that was pretty evenly split between Republicans and Democrats. And the number was much higher for women and for members who are people of color. So that was an alarming finding, as was 84% of respondents saying that they're very concerned about political violence in the 2024 presidential election.
Mm-hmm.
And is this mostly informed by the experience of January 6th, Greg, or is this just more concern about what could be to come or what has happened since?
Yeah, I think January 6th, 2021 probably influenced some of these responses here. Yeah, I mean, that was, you had obviously the riot, the insurrection at the Capitol. You had members of Congress barricading their offices, some of them evacuating, the Vice President of the United States evacuating. So that's a good question. I think it probably did kind of underscore, I think it was kind of an exclamation point to maybe some of these responses.
So is this why we're seeing so many retirements? Greg, it's folks on both sides of the aisle. In many cases, longtime members with great institutional knowledge, in some cases leading committees, they can't get out fast enough.
Yeah, some of them are leaving. Some longtime members are leaving, as you mentioned. Kay Granger, the Appropriations Committee chair, she's in her early 80s, so this might be a kind of a time for her to leave. Republicans also have term limits on committee members, which can influence some retirement decisions. Some members are kind of at retirement age, but some others are under 50, like Patrick McHenry. Just said in October he would run for re-election, then he switched his position, and now he's retiring. Derek Kilmer, a Democrat from Washington State, he's not even quite 50 years old. He's retiring as well. So I think some members are clearly frustrated with the partisan rancor going on, and that's, I think, contributed to this uptick in retirements you've seen the last 5 or 6 weeks.
Well, to that point, Greg, you say here in your story, when asked to describe the current state of Congress, the most common answer from former members was dysfunctional. And I wonder if that's actually a generous way of phrasing it.
Yeah, all the kind of synonyms of dysfunctional were the next most used words, I think, when they were described it. Polarizing, pick your favorite synonym for dysfunctional was up there, but dysfunctional was number one. And yeah, I mean, the two parties are about as ideologically distinct as ever. The kind of like whatever the broad middle that used to be in the Congress a generation or two ago seems to have evaporated. There's a whole lot of kind of bipartisan bonhomie that you may have seen, a generation or two ago. So, and it's, for a host of reasons, it's maybe not as attractive a job as it was back then.
Yeah. Well, with that in mind, full disclosure here, confession time, Greg and Kaylee. I learned today, by reading your story, of the U.S. Association of Former Members of Congress. And I've been covering politics for a long time. What is this group? What do they actually do? What are they for?
Well, they have, I think there are about 700 members in the group, and they have a variety of programs. They host a lot of dignitaries from foreign countries to kind of address them. And, they have a lot of big bipartisan gatherings. In fact, Doug Jones.
So they have like an annual picnic or something.
I don't know about that. They probably have some annual get-togethers that probably encourage the type of bipartisan get-togethers that maybe they'd like to see their former colleagues engage in more frequently. But yeah,
we need to do a remote over there, Kaylee. We're going to go pay him a visit. Hey, Greg, we need you to come back more often this campaign cycle. You were amazing in the midterms, and we look forward to your reporting and your insights throughout 2024. Don't be a stranger. Reporting for Bloomberg Government. Find his work on the terminal and online. That's Greg Giroux. I'm Joe Matthew with Kaylee Lines. This is Bloomberg.
your company news headlines. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Apple is adding a feature to iPhones to prevent thieves from gaining access to critical service data in the event that they know a user's passcode. Today, the company released the first beta test version of iOS 17.3, which includes a new stolen device protection feature. Apple up right now by 0.5%. AstraZeneca has agreed to buy Icosavix for as much as $1.1 billion to gain a developer of innovative vaccines for respiratory viruses. AstraZeneca ADRs are up by about 0.7%. Icosavix up now by 48%. Pfizer is revamping its cancer drug business with the impending closure of its $43 billion Seagen takeover. With more on that story, here's Bloomberg's Steve Rappaport.
Charlie, Pfizer says both companies have now gotten all regulatory approvals to complete the deal. Chief Commercial Officer Angela Wang is leaving, and the company is creating an oncology division merging both companies' research and sales divisions, which will be led by Chris Boshoff. Pfizer said in March that it would acquire cancer biotech Seagen as it forges a path out of the pandemic. The Seagen acquisition is a lifeline for Pfizer, which made billions off the COVID-19 vaccine and pill, but has suffered from the pandemic's decline. Pfizer slashed $9 billion from its sales guidance in October. Charlie?
And that's Steve Rappaport reporting. We do have Pfizer shares trading lower today by 0.2%. State Street laying off 1,500 people before the end of the year. This according to the Boston Globe. And those are our top company stories at this hour. And this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Live from Washington, where we keep you up to date on world and national news with the help of Nancy Lyons. Let's do that right now from the Bloomberg 99.1 newsroom. Hi, Nancy.
Hey, Joe. Ukraine's President Volodymyr Zelensky has been meeting this afternoon with President Biden to discuss continuing aid to his country. They just wrapped up those talks. He met earlier today with senators, but Republicans continue to insist that any security package for Ukraine must also include immigration reforms at the U.S. border. Senator John Barrasso made that clear after today's meeting.
The American people know that they want border security. Republicans have offered reasonable solutions that will work to help make our communities safer. If there's going to be a national security bill, it's going to absolutely have to include border security measures, or there's not going to be a national security bill.
Senator Barrasso says U.S. security must be the top priority. Democrats say it is imperative for the U.S. to continue supporting Ukraine to prevent Russia from winning. Sticking with immigration, British lawmakers have voted to support that government's plan to send some asylum seekers on a one-way trip to Rwanda. It's a victory for Prime Minister Rishi Sunak, who promoted the idea, despite drawing criticism from human rights groups and from those slamming the cost to taxpayers of at least $300 million. The House is expected to vote as soon as tomorrow to formalize the impeachment inquiry of President Biden. During a GOP news conference today, Speaker Mike Johnson told reporters lawmakers have an obligation to follow through.
We've come to this impasse where following the facts where they lead is hitting a stone wall because the White House is impeding that investigation now. They're not allowing witnesses to come forward and thousands of pages of documents. So we have no choice. To fulfill our constitutional responsibility, we have to take the next step.
House Speaker Mike Johnson says the decision to move forward has nothing to do with politics. The White House says the inquiry up to this point has not been valid since there was no formal authorization vote by the House. Harvard's governing board has voted to keep Claudine Gay as the school's president. Gay has faced calls for her resignation and firing after her appearance before a congressional committee in which she discussed anti-Semitism on campus. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Back to you, Joe and Kaylee.
You're out if people are going home this weekend. Kaylee, it sure seemed like it. Lawmakers are telling everybody goodbye. No deal on the border, no funding agreement for Ukraine, Israel. But now there seems to be a chance, at least for the Senate, that they go into overtime.
Yeah, or they're at least going to keep working today. Just a few minutes from now, according to Majority Leader Chuck Schumer, Senate negotiators are going to be meeting with the White House team at 3 p.m. Eastern time. He went on, though, in comments to reporters on Capitol Hill to say Republicans haven't moved enough off of H.R. 2. He said McConnell and Johnson need to stay in Washington, that they're going to be looking at the best way forward. But ultimately, Senator Schumer says a deal is not close yet.
That's pretty much what we thought. I guess we were accurate in the way we were reading this here. He spoke, by the way, after meeting with Zelensky. President Zelensky addressed an all-senators meeting this morning to make the case for funding. Here's Chuck Schumer.
Made it clear that if we lose, Putin wins. And this will be very, very dangerous for the United States. So we cannot let Putin influence through any surrogate what we need to do for Ukraine.
Just think how much this has changed. When he was here, that was just about a year ago. Pennsylvania Avenue was lined, as was Constitution, lined with Ukrainian and American flags. He stood in the speaker's rostrum to the dismay of some of his Republican critics. But peak Zelensky, a far cry from what we're seeing now. And you wonder for some lawmakers if he's wearing out his welcome.
Well, think about where we were a year ago. It was one less year of this conflict.
Absolutely.
And there was a lot of optimism about the offensive that Ukraine was going to be able to undertake, momentum they could potentially build, ground they could gain against Russia. And instead what you're seeing is a stalemate, which is why a lot of lawmakers are now asking about the game plan moving forward.
Right. As Zelensky says, we're going to go into this harsh winter, and we remain the only thing standing between NATO and Putin. To be continued. We'll bring you the news conference later on from the White House. We'll talk a lot more about it on Balance of Power on Bloomberg TV starting at 5 p.m. Washington time. With Kaylee, I'm Joe. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a good Tuesday afternoon, everyone. Live from the Bloomberg Interactive Brokers studio. We're streaming on YouTube and on Bloomberg Originals. It's Tuesday, December 12th, 2023. I'm Tim Stenevec, along with my co-host for the afternoon, Bloomberg News cross-asset reporter Emily Graffeo. Carol Masser is on vacation. Emily, good to have you with us. Longtime guest, first-time host.
Yes, I'm very excited also because it's a very exciting week, perhaps the last exciting one of 2023.
Well, if you say that, then next week's going to be very exciting as well. So, yeah.
Well, I'm keeping myself busy, but we have CPI, Fed, retail sales.
Yeah, you hit it all on the head there. The Fed kicking off its two-day policy meeting. We're going to, of course, hear from Jay Powell tomorrow. The question on everyone's mind is when and how much is the Fed going to cut? The answer to that question actually no more clear after this morning's CPI report. It's something we're going to talk about throughout the program. But you're absolutely right, Emily. A ton of economic data that we get this week. This is kind of the beginning of it. What are you most looking forward to?
Well, I mean, after we saw that Macy's decline today, I really want to know about retail sales. I spoke to one source today who said, you know, the CPI report, it came in as expected. If we really want to see the linchpin so far of economic growth, what's keeping economic growth so strong is really that consumer. So he's looking out for retail sales. So am I.
And I'm also wondering about what happens tomorrow when we hear from Fed Chair Jay Powell.
Of course.
Are we going to actually get any new information about when the Fed is going to cut rates? Because it seems like everyone and their mother is like, oh yeah, the Fed is definitely going to be cutting quite a bit next year. I don't know about that. And I don't know if Jay Powell is going to come out and say that.
I fear he will be very boring.
Well, he's never boring. Hey, well, speaking of the Fed, we got a preview with Dr. Stephen Skanke, Chief Economic Advisor at Keel Point. We're going to be speaking with him in just a few minutes. And a host of great stories to cover, too. JP Morgan is in a fight right now over clients lost $50 million fortune. Also, you've got Citizens Bank taking a page from the book of the failed First Republic Bank. We're going to speak to the vice chairman and head of consumer banking over there. And in Bloomberg Business Week, we meet the uber wealthy lawyer behind the fallen crypto mogul Sam Bankman-Fried, how that case threatens to tear apart his longstanding friendship with SBF's parents. And I know you're excited about this one, Emily. After nearly 20 years, the Fontainebleau Las Vegas will open up for business tomorrow. We're going to speak with the chairman and CEO of Fontainebleau Development a little bit later in the program. We're going to head on over to our TV team first, though, for our countdown to the close. This as we see some green on the S&P 500, the NASDAQ, and the Dow Jones. First up, let's bring in our TV colleagues for our countdown to the close, starting right now.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues Tim Stenovic and Emily Grafale. Emily in today for Carol Masser. Welcome to our audiences in full across all of our Bloomberg platforms, television, radio, originals, and our partnership on YouTube. And before we go any further, Tim, where the heck have you been?
I'm COVID-free. That's all I'm going to say.
Congratulations.
Oh, wow. You had COVID.
I had COVID, yeah.
Oh.
People still have
I didn't know this. I didn't get the memo.
Yeah, well, that's
He
why I
was
didn't
wearing
show
And I
up
gave him a
Thursday.
hug this morning in the dressing room. He didn't tell me.
Good thing you didn't kiss him.
Yeah.
So anyway, yeah, COVID's still going around.
Katie
You know what it
going
gave
blue.
me a lot of time
It's
to
only
do,
3
though?
in the afternoon.
It gave me a lot of time to stream.
Oh, yeah?
And yeah. I didn't stream anything on Netflix. I actually streamed the beginning of the new season of Fargo, which is actually really good, and some old seasons of
Very
Fargo.
dad energy of you.
However, you know, I will tell you that the big news of the day is Netflix's data being released. Guys, where were you the moment that you saw that note, that Netflix's viewership data? Because this is such a big deal.
Well, I was actually sitting right here.
I know you were. I saw you talking to Lucas Shaw about it. This is a big deal. Netflix for years has held this data so close to its chest, and for years pretty much said, we're never going to release this data. We don't have advertisers. We have no reason to ever release this data. Then, Emily, enter the writers and actors strikes.
I mean, I'm pretty surprised at these numbers of what people are actually watching. The most hours viewed, the show is The Night Agent.
Yeah.
Personally, I've never heard of that
It's
show.
Romane's favorite show.
I've been
actually
locked
my
out of
nickname.
my parents' Netflix account for a while, though, so I really don't watch
That's
a lot of
Netflix's.
Netflix.
Netflix's did that on purpose, probably, with their new password sharing.
Exactly. I mean, Romaine, have you seen any of these shows? Ginny and Georgia?
No.
Lori? Wednesday?
No, in fact, prior to breaking this story on air about an hour ago, I think I'd only heard of one of them, and I haven't seen it, and that was a Bridgerton story. I missed now, is a Bridgerton story, is that different than the first Bridgerton?
I think so. I think
So
it's
the
next
first one wasn't a story. It was just, what, like a tale?
That's a good question.
You do bring up a really good point, Romaine. I did go
do.
through the
Thank
25 top viewed shows.
Yeah.
I'd actually only seen 2 of them.
Wow.
Out of the top 25.
Well, my other question to Lucas, and this was a thing too,
Yeah.
because we should point out for our viewers, that's basically total number of hours watched. So this is going to skew in favor of, I guess, series, things that have multiple episodes, as opposed to if you just search out for just a standalone movie that's, say, 2 hours long, you know, that doesn't even rank.
Yeah, it's the methodology here is definitely not something that's like apples to apples when you compare it with any sort of like ComScore viewer data that you'd get from like classic linear TV. And I think that's kind of the point. But at the same time, it does go to show that the stuff that's, you know, international, the stuff that is big series, that stuff goes to the top. And the thing is, I actually opened the Excel document here that Netflix released.
Oh, really?
Everything is in here. I mean, the most is like hundreds of millions of hours.
Yeah.
The least is 100,000 hours, but there's like tens of thousands of titles in there.
So it sounds like you really spent some time with that spreadsheet too.
I did.
Well, it's good that you did the due diligence. Let's just quickly talk about one of the other big stories of today, and that was an interesting signal about the consumer, about the holiday shopping season from Hasbro. Of course, the news there that they're cutting
I haven't heard this story.
1,100 jobs. Romaine and I were just chatting about it a little bit, but the timing here, we knew that Hasbro has really been struggling with that softer toy market. You think about the outlook that they gave back in October. Clearly, those struggles continuing.
Emily, do you know Hasbro's brands at all? Because Katie, when she broke the story a little bit earlier, she focused in on My Little Pony,
of course,
which is pretty much on the nose for her, being a horse lover, and Dungeons and Dragons.
I knew she was going to do
Which
Dungeons
is
and
a dragon.
Dragons.
It's basically just like
Greifeld.
a mythical horse, right? Is that how it works?
Yeah, I don't know. I mean, I haven't played with toys in a while, and I can't imagine. I mean, there might be a lot of kids who are not playing with these toys anymore. They're iPad kids now.
Can I just say,
they're not
before,
Hasbro kids.
before we go any further, I also don't play with toys.
You have to clarify, My Little Pony notwithstanding?
I don't have any, I promise.
Okay.
Yeah, I mean, and to your point, Emily, I mean, this is right. I mean, I had this conversation. I went home last night after this actually broke late last night, and I went and asked my son about it because I was thinking, I couldn't remember the last time we even bought him like a toy.
Right.
Like everything is always computer related or video game related. But I guess once they get past like what being a toddler, it's like I don't know.
Yeah, D&D is not necessarily toy related, right? It's a game.
That's like for teenage boys.
Yeah.
But that's what Hasbro's pivoting to now.
And adult boys as well.
Adult boys.
All right, we got to go. We actually got to talk about the Fed because you know they're kicking off a 2-day policy meeting today.
That's right.
Oh, do we have to
even though
cover that?
Netflix came out with that data, other stuff is actually happening.
Yeah,
That is going to
priorities.
do it for now. We're going to be back with you guys. Don't worry. In less than an hour, we're going to be doing our Beyond the Bell coverage
Is it gonna be
right
both
here.
of you?
It's going to be both of us, yeah. Unless one of us gets COVID between now and then. I think we should be good. We'll be back together live on TV, radio, and YouTube on Bloomberg Quick Take at 4 p.m. for Beyond the Bell when we take you through we are going to get a rate decision. Of course, we're going to hear from Fed Chair Jay Powell. Pretty much everyone expecting that the Fed's going to hold rates steady for a third consecutive meeting. And why shouldn't they? We've got a bunch of encouraging data for team soft landing over the past 6 weeks or so. Most recently, today's CPI print, which largely came in line with forecasts. We should note that traders did trim their expectations for the Fed to aggressively ease monetary policy next year. Now, Emily, they're seeing about 108 basis points of Fed rate cuts next year, down slightly.
Down about 2 basis points.
So down ever so slightly before the CPI numbers came out. Hey, we got a great voice with us. Regular viewers and listeners know him well. He joins us regularly when the Fed meets. We got Dr. Stephen Skanke, Chief Economic Advisor at Keel Point. His public service spanning 4 presidential administrations, Nixon, Ford, Carter, and Reagan. He served on the White House National Security Council staff and economic policy team and at the U.S. Treasury. He joins us here in the Bloomberg Interactive Brokers studio. Good to see you. It's rare that we get you in the flesh.
I know. It's great to see you, Tim and Emily, to meet you. We're in New York to do a few things here, some meetings and some shows. So it's great that we can come by and be with you in person.
Yeah, it's really good to have you here with us. How are you looking at the last 6 weeks of data that we've gotten from softer than expected employment reports, or one in particular, to CPI data coming in showing that, hey, the Fed does seem to be having this to a certain extent under control?
Yeah, the data has been actually very good. And when you look at it overall, economy is in good shape, employment is cooling, but not too quickly. Consumers have confidence. Spending still is remarkably robust. The PCE core inflation numbers have been great when you look at the 3-month and 6-month annualized numbers. And I think Jay Powell is probably breathing a sigh of relief today with the CPI numbers. You know, there have been some internal discussion about should they start cutting in March. He's been trying to hold off expectations. And so the CPI number being up just a touch over October core CPI is really good news for him. And I think it settles and allows them to maintain their wait and see stance and not to let markets get ahead of themselves.
You know, Tim had mentioned that we saw expectations for a cut ease just a little bit, but I would say largely unchanged when it comes to before and after the CPI print. The market traders are really still expecting that we'll see quite a bit of easing. What do you make of that reaction that we saw to this inflation data?
Well, it was interesting. You know, last week, Fed Fund Futures had a 60% bet that they'd start cutting in March. And after the CPI print this morning, that went down to about 48% odds. So it's eased back a little bit, but I think markets are still expecting the Fed to move decisively once we get into 2024. And whether it starts in March or May, which is sort of the current expectation, absent some dynamic move in the numbers this month and next month, I think we're going to see them get started when they get started and go about 25 basis points per meeting. Unless something happens, if we don't have a soft landing, if there's a nosedive, they could amp up the cutting. But otherwise, it looks like the trajectory that we're on, we'll see about 25 basis points a quarter, whether we start in March or in May.
Do you think that's the right move for the Fed to be making, given the history of over the last 40, 50 years, the two instances of moving too quickly to cut rates when the Fed thought that inflation had been tamed?
Well, I understand their caution, and this current board or this current chairman got head faked out in 2021 and was too encouraging too soon. So Jay Powell is going to be particularly cautious. But if we see inflation continue, especially core PCE, continue to annualize in the 2.4, 2.5 and move on down, then what we have with interest rates where they are is real active restraint on economic growth, because you've got a positive real rate of interest in the range of 2.25% to 2.5%, and that would really squeeze the economy, particularly as it's slowing. And they certainly don't want us to nosedive into a recession. You know, one of the things we've learned over the years is that GDP growth and unemployment aren't linear. I mean, we saw unemployment go up to 3.9. Now it's come back, which is great. That's as a result of more people coming into the labor force, particularly parents who now have adequate child care. That's great news. But it could turn on a dime, and all of a sudden it's in the 4% range, and a lot of anxiety and decisions that are unhelpful start being made then.
So tomorrow, during the Fed meeting, I will be working on the Top Live blog, where we sit in front of the Bloomberg terminal and we pretty much parse every word that Jay Powell says.
I thought that was all AI. That's real people?
No, it's
I'm
real
just
people.
Kidding. I know.
I think the AI helps us make charts. But I'm really curious how you're thinking about how Powell is going to sound tomorrow, because I was reading one note and a strategist had said he doesn't really have any reason to sound more dovish here, especially since we've already seen a loosening in financial conditions. We've already seen rates come down so much. Why would he give the market even more, I guess, excitement about rate cuts? But what do you think we're going to hear from him?
Well, we'll see what the bots say, but I believe that the CPI print today gives him the ability not to be dovish, but not to be too hawkish. Mm-hmm. I think he was coming into the meeting with the PCI or the PCE inflation that we had, and Governor Waller's comments that led markets to think that rate cutting would start in March, and then Jay Powell came out and tried to damp it down, but it didn't really work with markets. So I think he was feeling a little bit of tension to have to come out a little bit strong at his press conference tomorrow. And now with the CPI number that we got and where Fed funds futures are, albeit not greatly moved, mm-hmm. but at least moved in the direction that Powell would like. And so I think it'll be a relaxed and smooth.
Boring.
Let's see where the data takes us.
I told you, Tim. It'll be boring.
But it can't be boring. We got to be excited about this stuff.
I'll love it.
Dr. Skanke, does anything about this narrative give you pause right now? And I think back to Friday's employment report, and the unemployment rate actually came down. Is it possible to have a soft landing when the U.S. economy continues to add jobs and the unemployment rate continues to go lower?
I think it is, Tim. The opportunity for a soft landing, I think, has actually gotten better. My great concern is that the Fed right now has a particularly restrictive stance on, and with what we've seen in a reduction in money supply, M2, is down now for about 5 quarters. Historically, that didn't bode well for economic growth 18 months out, and we're coming up on 18 months out when we get into March. I think we could have a big surprise. I'd love to have a soft landing. I think there's a great opportunity for it, but I don't think we're going to get it. I still think that we're going to end up in a recession. You do think we are? I do think that we will. I think it'll be shallow. I think it'll be short-lived. But I think that the cumulative effect of what the Fed has been doing over the last year and a half still has a bite in it that we haven't seen fully taken.
Just in the last 20 seconds, where do we see that happen? What part of the economy?
I think in GDP growth, in the service sector, and in companies tightening up on employment.
Do you think we'll start to see jobs being lost each
I
month?
do.
When do you think we'll start to see that?
I think it'll probably come in late March, early April.
Okay. Well, we'll definitely have to have you back before then. Always good to see you, and really good to see you in person. Dr. Stephen Skanke, he's Chief Economic Advisor at Heel Point, also former White House National Security Council staff and economic policy team member, and at the U.S. Treasury as well. It's Bloomberg Business Week.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, all pushing higher. 39 minutes to go ahead of the closing bell. Right now, we've got the S&P advancing by 19 points, up 0.4%. CPI Tuesday, while markets continue to bet the Fed will be on hold tomorrow. The latest numbers do bring into question the aggressive pricing of a dovish pivot. Dow Jones Industrial Average up 180 now, up by 5 0.50%. NASDAQ up 92. That is a gain of 0.6%. 10-year yield 4.20% with a 2-year that's yielding 4.73%. Spot gold down $2.50 the ounce to $19.79. That is a drop of 0.1%. Ham West Texas Intermediate crude oil is lower now by 3.6%, $68.75 for a barrel of WTI. Traders have trimmed their expectations for the Federal Reserve to aggressively ease monetary policy next year after this morning's CPI report that was largely in line with forecasts. Victoria Fernandez is Chief Market Strategist at Crossmark Global Investments.
Maybe we need to take a step back. Maybe we need to think that the Fed probably will be higher for longer, and I'll actually be looking for Powell tomorrow to push back a little bit on where the market is, where it's gotten a little bit ahead of itself. I think this inflation report feeds into that narrative.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Oil plunged today, approaching the lowest level in 5 months. Again, West Texas Intermediate crude today down 3.6%, taking oil stocks with it. ExxonMobil down 1.4%. ADRs of BP lower today by 1%. And Chevron shares lower today by just about 1% as well. So again, recapping, stocks higher, S&P up 20, a gain there of 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really appreciate it. Well, I mentioned it's a most read story on the Bloomberg terminal in the last 24 hours. It's spent a significant portion of today at the top. It's also today's big take. It's a fight over $50 million. In one corner, you've got the largest bank in the U.S. by assets. We're talking about JP Chase. In the other corner, a one-time client of the bank, a family who says its $50 million in wealth has been wiped out after making outsized, risky bets on oil and gas partnerships. The bank claims it was acting on an investor's wishes to take risks. His family and his doctors say he was slipping into dementia. The details of how things unraveled are now spooling out in a dueling high-stakes legal claim when it comes to a fight that's playing out in Boston federal court. It's testing the degree to which a major financial firm might be held responsible if a wealthy client slides into dementia and their investments sour. Tom Schoenberg is financial investigations and corporate enforcement reporter. He writes about the court battle. He joins us from our Washington, D.C. bureau. You can read Tom's story and more from Bloomberg The Big Take on the Bloomberg terminal and at bloomberg.com/big take. Tom, good to have you with us. I couldn't put this down once I started reading it. Tell us about Peter Dolger. Who is he, the man at the center of this?
Yeah, Peter Dolger. He's actually tied to a family that started selling lager in New York City more than a century ago. And Peter himself started his own business in the 70s, one of the kind of energy conservation business where you go into people's homes, talk to them about their insulation in the windows and in the attic. He sold that business to Honeywell back in the mid-'90s and made a fair amount, like an 8-figure payout from that. And over the years, he kind of invested that in various places. And one of the things that sort of he settled on, put a significant amount into, are master limited partnerships, or MLPs. And these are securities tied to oil and gas, natural resources such as oil and gas, and which the SEC has said has a lot of sort of cash and tax advantages, but at the same time can become mercurial because they're tied to swings in the oil markets and such. And for several years, those investments did really well for him. And JP Morgan says he made sort of tens of millions of dollars through those investments, at which point they were able to buy themselves a mansion in Palm Beach, Florida, memberships at private clubs, as well as they had an upscale condo that they had for some time in Boston. Towards the end of 2014, as oil prices started to slide, Peter thought of moving those assets from the place that had been managing them to another. JP Morgan, which had a role, he'd banked with them, had taken loans out from them in the past. They offered up a new product to them, a new company, to sort of manage those assets through J.P. Morgan and, talked him into bringing over his portfolio there, which at this point was, tens of millions of dollars in MLPs. At that point, go ahead. I'm sorry, Tim.
No, that's okay. I just want to jump in real quick and get an understanding of what J.P. Morgan's role is here. Was the company supposed to be like a fiduciary in this? Because that's come up in the lawsuit, as you write about. Is it supposed to be like a wealth manager, a private wealth manager to, help protect and grow assets for the next generation? Or were they taking risky bets because that's what he wanted to do?
Well, this is the crux of the matter, right? So, the J.P. Morgan says that the fiduciary duty that they had is literally the contract that they entered into with him regarding these specific investments. And at the time when he went to move the portfolio over to J.P. Morgan, it raised alarm bells within J.P. Morgan because under their own guidelines, the amount of concentration of these MLPs that Peter wanted to move, at this point he's 78 years old, would have made up about 33% of his assets, which JP Morgan's guidelines were like you shouldn't have more than 5% in here. They had that Peter was worth about $80 to $100 million when his family says it was much less than that. So meaning that concentration was, beyond 60%. They internally debated this and came to a conclusion that we'll take on this as long as Peter signs a letter, essentially, noting that he's a sophisticated investor, that he holds more than $50 million in assets, so he then becomes an institutional investor, and that he would not hold them liable for any losses in this portfolio.
Tom, you raised a good point in your big take that older investors are typically, they have more assets, they're wealthier, and so we often see their wealth managers, financial advisors pushing them to riskier investments. Can you talk a little bit more about that and whether this is a larger problem for the baby boom generation that is getting older and attracting more wealth?
Yeah, what we're seeing right now is sort of this historic transfer of wealth, and as boomers retire in age, people are going to face cognitive decline, which is the issue here in Peter's case. And financial institutions at the moment, there's no real good set rules in terms of how they must manage that. A lot of firms, including J.P. Morgan, has internal policies that their bankers should be looking out for, and then if they see them, escalate within the firm. But in terms of regulatory structure, there's really not much there to work with.
How does the bank respond?
So, J.P. Morgan's point is, look, during this period of time, we're talking about 5 years here, and we now have doctors and such noting that Peter's condition kind of worsened through this time. That the bank says they were never told that Peter had been seeing doctors that and there were a couple episodes here that required hospitalizations, that information wasn't relayed to them. As well as the banker that had been interfacing with them regularly claims that he doesn't, he was not aware of any cognitive decline until after this all played out and the family moved to sue the bank.
Tom, is there, you had a chance to sit down with members of the family, with Peter as well. Can you talk a little bit about that experience and what it was like?
Sure, yeah. I met the family in Boston. Peter and his wife Yoon. I interviewed them in her sister's condo, and that is because they put their house, sold their Boston place earlier this year, which the family says they did this in order because their portfolio was almost zeroed out at J.P. Morgan, and so they're now living with family. And Peter's with us for a bit, and I asked him about starting the earlier business, and even talking a little bit about the beer the beer company his great-grandfather had. And but yet you could tell that as you tried to talk to him about different things, it was hard for him to follow. He also becomes tired pretty quickly, and eventually he went to go up to go take a nap. And these are signs that the family says J.P. Morgan should have been aware of when they were interfacing so closely. Their expert says that kind of about mid-2019 is when sort of these, he was just getting progressively worse to where it would become noticeable to people that were talking to him and such.
Well, it's a great story. It's today's Big Take. You can read it at the Bloomberg website, bloomberg.com/Big Take, and also, of course, on the Bloomberg terminal. Tom Schoenberg, Financial Investigations and Corporate Enforcement reporter, writing all about it. Hey, let's stay in Washington, D.C. now and get to check the latest world and national news. We got Nancy Lyons in the 99.1 newsroom there. Hey, Nance.
Thanks, Tim. Welcome back. Senate negotiators are meeting this afternoon with White House officials to discuss a way forward on making changes at the U.S.-Mexico border. Republicans say they need to reach a deal on the border before approving any additional aid to Ukraine. This morning, Ukraine's President Volodymyr Zelensky made an impassioned speech to the lawmakers for continued support. Senate Majority Leader Chuck Schumer says the leader made a strong case.
He made it clear, and we all made it clear, that if we lose, Putin wins. And this will be very, very dangerous for the United States. So we cannot let Putin influence through any surrogate what we need to do for Ukraine.
Schumer's support for the aid bill was echoed by Senate Minority Leader Mitch McConnell, but McConnell says they must first address the border. The House Rules Committee met today to discuss the latest on an impeachment inquiry into President Biden. The committee's looking over documents to decide whether there's enough evidence to move forward. Congresswoman Mary Gay Scanlon, a Democrat from Pennsylvania, says Republicans continue to falsely accuse the Biden administration of stonewalling.
They've been given unprecedented access to the evidence. Their own witnesses, their own documents have debunked the things that they are holding out there as evidence of some fictitious misconduct.
Scanlon says even the whistleblowers' claims have been debunked. House Speaker Mike Johnson says they have no choice and must follow the facts where they lead. New York's highest court has ordered the state to draw new congressional districts ahead of the 2024 elections. It's expected to give Democrats a potential advantage in what is expected to be a battleground for control of the U.S. House. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. 20 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all in the green. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks with a bid right now, with the Dow currently up 159 points. S&P's gain 18, and NASDAQ is higher by 0.6%. The U.S. 10-year yield at 4.2%. Gold is down 2. Oil trading in the red, and Bitcoin is little changed. Among the main 11 S&P sectors, leaders were materials and tech. Only utilities and energy were in the red. And leaders to the upside in the Dow, Salesforce and American Express, while Disney and Intel led to the downside. After earnings, Oracle plunged 12%. And in other news, Walgreens is said to study a potential IPO for Boots. Wrapping things up, FedEx hit a 52-week high. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, it's already that time. We got just about 18 minutes to go until the close of U.S. trading here in New York City. It's time for a drive to the close. For that, we go to Anna Arsov, Global Head of Private Credit and Financial Institutions at Moody's Investor Services. Anna joins us on Zoom from New York City. Anna, good to have you back with us. How are you?
Great. Thank you for having me.
Yeah, thanks so much for joining us. Okay, let's take a step back and just think about, where we were a couple of years ago. Carol likes to talk about that moment that the two of us had at Milken. I believe it was, over 2 years ago, where we left Milken and we said to each other, private credit is kind of all that anybody talked about at that version of the Global Institute, the Institute's global conference. Where are we now, 2 years later, when it comes to private credit, especially at a time when banks have pulled back a little bit due to high interest rates, and consumers have pulled back on spending quite a bit?
Yeah, I mean, these days you cannot turn anywhere, as you said, without talking about private credit. Probably 2 years ago was more the Milken and the special conferences or special, opinion makers like ourselves who were launching at that time. Our first research campaign on private credit was in 2021. And it was very interesting. At that time, it was really folks who were extremely, I would say, in the professional ranks and in the professional, I would say, journalistic and regulatory environment that really cared. It was not like something that was a mass topic of discussion. And then you say, where are we now? 2 years later, you almost cannot turn a news cycle or, particularly in the finance world or a publication, and even talking to any kind of asset manager that does not either increase their private credit or alternatives allocations, or is interested to build one. So it's definitely becoming an asset class du jour.
Anna, does this make sense with the macro environment that we're seeing? I know you have a relatively pessimistic outlook for 2024. So how do you square the boom in private credit with perhaps what's going on and what is going to progress in the macro environment in 2024?
Look, absolutely. You have to kind of think about the forces that are at play here. At the end of the day, private equity has $1 trillion of dry powder that has to be put in play. And we know that typically, private equity puts this dry powder, favorably, of course, in a low rate environment where there is growth or M&A potential. That was not the environment that we had over the last 2 years. We had high rates and we had a lot of uncertainty around monetary policy, political uncertainty, geopolitics, and obviously economic growth slowing down. So from that perspective, this capital obviously is sitting on the sidelines and needs to be deployed. And in terms of how it's deployed, it has to be levered with some kind of financing. And typically, as we know, the Wall Street and the broadly syndicated loan market has been the core of how this market has been, who's financed the financial sponsor universe. So private credit came in this more uncertain times over the last few years with the disruptions in the BSL market, and then came in with a certainty of execution, which was very important. So whoever had to put deal in the market, and particularly if those deals had a little bit more hair, name it, it's a little bit high leverage, some restructuring, some infusion of capital from a sponsor, the BSL market would not be, was not open really for the low Bs, if you will, from a rating perspective. So they ended up in the private markets, and they ended up for a very rich premium of illiquidity premium of roughly around 200 basis points. So it was a nice boom if you are basically in this market, and there were no real credit losses over the last 2 years. So, and why was that the case? Because a lot of the portfolio companies refinanced in the 2020-21 low rate environment or zero rate environment, and so they bought some time. And what we've noticed now, as the rates start hiking obviously over the last year, there has been some negative implications on performance that's first seen in interest coverage, not yet in the credit story, but eventually it will show up in the credit story.
Anna, what happens if we actually do achieve a soft landing here? It seems like Team Soft Landing is winning at this point. Equity in the bond market are certainly saying that. If rates come down, if the Fed cuts, do we see private credit suffering as a result of that? Because customers will start to take loans out from traditional financial institutions?
Look, not necessarily. Private credit will suffer if we have actually continued rate hikes. And that will, what I mean by suffer will, from a credit perspective and performance. Decreasing the rates will improve credit and kind of sustain credit performance. We're certainly going to see, higher defaults in the highly levered customers from where we are now. But that would play much better for a default cycle than significantly higher rates from here. So from credit performance, lower rates are actually better. From a competitive standpoint of view, which is part of your questions, yeah, we do expect when there's a little bit more rate certainty for the public markets, the broadly syndicated loan market, to open. We actually wrote a report that we say that, as a matter of fact, with the opening of the BSL market, which we anticipate, and it was kind of a little bit of start and stop in the fall of this year, because we still had a lot of uncertainty from an economic perspective, but we think 2024 is probably going to be better for that market. There will be competition between private credit and the BSL market, but that competition is really going to be in the in that sort of north of $700-500 million transactions. Private credit has always existed in the middle market space, and that is kind of the sweet spot that the banks are not really going to play. So that's going to continue to be the sweet spot for them. There will be some credit losses higher from here, but if the rate cycle actually is more constructive, that will obviously be better for them. However, on the competitive side, with the BSL market open and the large players who compete with the BSL market, like the Blackstones, like Immerse, like Blue Owl, they certainly will find more competition. So maybe this illiquidity premium of 200 basis points and the pricing that we're getting over the last 2 years is maybe not going to be there. Maybe the covenants will suffer because the private credit, we wrote research, has actually stronger covenants than the BSL market. So if that competition opens, we can see dilution of covenants, which is not great for creditors. But broadly speaking, lower rates should help the overall performance.
You mentioned the refinancing, and I actually talked to a number of sources who are very concerned that next year in 2025, 26, there's going to be a wall of refinancings of companies that locked in those low rates and now suddenly have to repay their debt at a much higher rate. How much of a risk is that? How worried are you about that looming wall?
Absolutely. And I said, the good thing is about that zero sort of rate cycle during the pandemic, 2020, 2021, is a lot of companies refinanced. The market was open for companies who traditionally would not even be able to access capital. So if you think about an average life of a loan, 3.5 to 5 years, yes, it's coming towards more 2025 and 2026 and 2024. So the later part of 2024, which is kind of the expectations when there is going to be rate hikes, our base case is roughly second half of the year, springtime, we'll see maybe up to 100 basis points lower rate. So that could actually help whoever the companies, if the companies can wait.
That's
that later part of next year and actually capitalize on the financing cycle of 2025.
We got to run. Anna Arsoff, Global Head of Private Credit and Financial Institutions at Moody's Investor Service on Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Peloton. An update for the U.S. stock market. We've got Walgreens Boots Alliance shares moving lower right now. They are down by about 0.3%. Sources tell Bloomberg Walgreens is reviving discussions on a potential exit from its international arm. This comes nearly 18 months after a sale process was scrapped. After yesterday's 19% surge, Macy's has been cut to sell at Citigroup on skepticism that a buyout offer from Arkhouse Management and Brigade Capital Management will actually materialize. Macy's shares today, they're now down by 8.2%. Billionaire investor Warren Buffett's firm, Berkshire Hathaway, has cut its holding in PC maker HP Inc. by almost half. And with more on the story, here's Bloomberg's Tom Busby.
Well, Charlie, according to a regulatory filing, Berkshire held 51.5 million shares, 5.2% of the Palo Alto, California-based company on November 30th. Now, that's down from 97.85 million shares on October 3rd, according to data compiled by Bloomberg. The transaction puts Berkshire on track to be a seller in HP for a second consecutive quarter. HP shares have underperformed those of rival Dell Technologies this year as demand for personal computers cratered in the post-pandemic bust. Sales for both HP and Dell shrank in the latest quarter and lagged behind analyst estimates. Charlie?
And that's Tom Busby reporting. Hewlett-Packard up 0.3%. Dell shares up 1.1%. State Street laying off 1,500 people before the end of the year, according to the Globe. Those were our top company stories. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovec and Emily Grafeo in for Carol Masser this afternoon. We are just getting ready for the close of trading here in New York. We're going to be joined by our TV team for our Beyond the Bell in just a few minutes. First, though, I want to get to one of the most read stories on the Bloomberg terminal. It's all about a trader at Goldman Sachs, Emily, who's one of the highest paid executives, actually got paid more than the company's CEO.
More than David Solomon. This number, get ready for it, guys.
And he's leaving.
$100 million.
And he's leaving.
And he's leaving.
I mean, that's a pretty good payday.
Yeah, so he led the commodities trading business. Of course, we know that there's been a lot of volatility in commodities over the last few years. He's going to be staying on as an advisor to help with the transition, but he oversaw the resurgence of the unit. He's been at Goldman since 1999. Can you imagine?
He's actually not even a very old guy. He's 47 years old. We're talking about Ed Emerson, who, as you mentioned, leads the commodities trading business. He earned roughly $100 million over the previous 3 years. That's according to people familiar with the matter. You mentioned it's more than David Solomon. It compares to $77.5 million awarded to CEO David Solomon over that same span.
Right, so Tim, do we know exactly the reason for him resigning? Because we have in our Bloomberg article that he's known as a vocal critic of Solomon's leadership. He's taken issue with strategy missteps that led to billions in losses for Goldman, but I'm really curious if there's any more that will come to learn about why exactly he is stepping down.
Well, I would encourage everybody to check out this story. It's a Bloomberg exclusive. It's available on the Bloomberg terminal and at Bloomberg.com. It's by Sri Natarajan, who covers Goldman Sachs for Bloomberg. It doesn't, I'm sure there's going to be more to come at this, but you raise a good point, or more to come from this. You raise a very good point, Emily, in saying that he has been a vocal critic. Before we go, I do want to bring a headline from the Bloomberg Professional Service. Elon Musk's X 2023 ad sales projected to slump to about $2.5 billion. Elon Musk has said recently that ad sales are down. We know that some large advertisers are boycotting the platform in the wake of Elon Musk's behavior on the site. Hey, don't go anywhere, because coming up, we're joined by our Bloomberg TV team for our cross-platform coverage on radio, TV, and Bloomberg Quick Take Countdown to the Close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with Tim Stenovec and Emily Grafeo. Welcome to our audiences across our Bloomberg television, radio, and originals platforms, as well as our partnership with those folks streaming on YouTube. Tim?
Do stocks go down anymore? It just seems like they go up. At least that's what we've seen over the last 6 weeks, Emily. Get this, the S&P 500 right now is at the highest level since January of 2022. Same with the NASDAQ 100. You have to go back to January 3rd of 2022 to actually see levels this high. We are pretty close to all-time highs on the S&P 500 and the NASDAQ 100, Emily.
But Tim, we are seeing some stocks go down. I'm looking at Macy's. It saw the worst intraday decline since August after Citi has expressed some skepticism that that $5.8 billion buyout from Brigade and Ark House Management will actually materialize. I'm also looking at shares of Oracle, plunging the most in 3 months after reporting cloud sales growth that slowed for a second straight quarter.
And you wonder whatever happened happened to the broadening of the rally that everyone had anticipated? And it looked like it was happening for a while. I look at the Russell 2000 right now, off by 0.1%. I bring this up because we're getting close to that period where you should start to see the January effect come into the market, where people start bidding up the smaller cap stocks for a period of a couple of weeks before they switch back to those big caps.
All right. Well, we started to see some broadening out. I guess the question is how much does that carry over into next year? We should point out, too, I mean, you have the S&P and really all the major indices here in the U.S. sitting on pretty healthy gains. But as you pointed out, we were talking with our earlier guests here, you're still seeing record levels in France, record levels in Germany. The MSCI All World Index is less than 5% away from a fresh high. And then, of course, whatever the heck is going on in Japan sitting there, and their benchmark index up about 26% here on the year. The Dow Jones Industrial Average here in the U.S. finishing the day higher on the day by about 173 points, or 0.5%. Similar moves for the S&P 500 on a percent basis, a 0.5% gain that pins it right around that 46-43 level. The NASDAQ Composite higher by 100 points, or about 0.7%. And the Russell 2000, which Scarlett was just referencing, down on the day. That's your laggard, down about 0.1%.
Yeah, not a bad rally if you take a look at the S&P 500 and peel back the layers. 3 stocks higher for every 2 stocks that were lower. We have 299 stocks in the S&P 500 moving higher. Scarlett today, 201 moving lower. Similar sort of breakdown on the Dow. 21 stocks moving higher, 9 moving lower.
All right, let's take a look at the sector performances because it is overwhelmingly in the green. We have chip companies leading the way, up 1.5%. Broadcom is a notable advancer there. Commercial and professional services and insurers also rising quite a bit. On the downside, all 23 members of the S&P 500 Energy Index are lower on the back of falling oil prices, with WTI below $69 a barrel. Autos and components, as well as telecom stocks, are down.
All right, well, let's take a look at some of the notable gainers on the day today. I want to start with the best performer on a percentage basis in the S&P 500. Insight closing higher by more than 8.45%. This biotech firm up for a second day in a row. Yesterday, it rose 4.3%. All that because of what the company said happened in a trial of its treatment for patients with refractory chronic graft versus host disease, also known as GVHD. They'd received at least 2 prior lines of systemic therapy, and in that trial, they met its primary endpoint. Investors certainly happy about that, making it the best performer on a percentage basis in the S&P 500. Scarlett, you mentioned Broadcom, ticker AVGO, among the best performers on a points basis in the S&P, up for a second day in a row as well, actually hitting a record high today, up more than 4.1%. The company rose yesterday by more than 9%. This after Citi restarted coverage with a buy recommendation, writing that AI tailwinds will help to offset a correction in the company's semiconductor business. And we saw continued strength over the last couple of days in the chip sector. And here's a fun one for those who may be eating lunch on the West Coast right now. Kava Group, the company that owns and operates the Mediterranean fast casual restaurants, shares spiking today by 19.6%. Lockup agreement that prevented company insiders and other big shareholders from selling shares actually expired today. Oftentimes you see stock move lower when that happens.
Yeah, I was sort of confused by that. I mean, if it had gone up, fine, but to go up 19-20% was just kind of odd.
It's still down more than 30% from its July highs, Romaine, but it still was a surprising move to see, because oftentimes you see, insiders sell stock, but if they're holding on to it, I guess that'll make
it looks like some did. I think the other issue, though, too, is when you looked at how small that float was, maybe they added putting those shares back out onto the market maybe provided somewhat of a boost.
That's a very good point.
Yeah.
And looking at the decliners, as I mentioned, Macy's having the worst intraday decline since August on that Citi skepticism here about the $5.8 billion buyout deal. This is really a change from yesterday because we saw that stock up over 20%, with some analysts even saying that the buyout was too low. That, of course, the offer coming from Arkhouse and Brigade. Now Citi saying, given the macro environment, the interest rate environment, it might not be the right time for a deal to really materialize here. I'm also watching retail sales, so I'm very focused on this retail sector this week, particularly when you look at the Macy's move and the decline for today. I'm I'm looking at Oracle as well because they plunged the most in 3 months after reporting that cloud sales growth had slowed for a second straight quarter. We're seeing that stock down as much as 12.5%, the biggest drop since September. And Johnson Controls is also on my radar. This is a maker of fire, heating, and cooling equipment. They're a $35 billion company, down as much as almost 6% today. They had a cyber hack recently, and there are a number of analysts coming out and saying that their earnings that recently missed are really coming down to that hack, and the restraints are really going to continue into the next quarter and the next earnings season.
All right, Emily, let's take a look at what's happening in the yield space. Overall, a flattening out of the curve, but you go back to 8:30 a.m. this morning when we got that CPI report out of Washington here, and the knee-jerk reaction was pretty swiftly to the downside, but most of those bets really sort of flipped here, and you start to see a lot of selling come back into the short end of that curve, and that pushed yields ever so slightly higher on the 2-year, only by about 2 basis points here at the close. Meanwhile, the rest of the curve you did see down here on the day, roughly by about 2 to 3 basis points, depending on what part you're on here. And I do wonder, Scarlett, if that is a direct reaction to the CPI report, or maybe people are still waiting for tomorrow to hear what Jay Powell has to say.
Also, the 30-year bond auction, which was fairly well received, all things considered. It was certainly better than the last time they sold the 30-year bonds. And the Monday auction, as we were talking about earlier, was not that well received. So good news, I suppose, for people who are looking to add duration.
The question I have with, that the Fed is considering potentially right now, Emily, is when it comes to the bets that people are placing right now on the actual cutting of rates next year. And we saw the bets kind of decline ever so significantly. What are we down to? About 108 basis points of cuts for next year after that CPI data came out this morning. So it fell ever so slightly, but it seems like everybody, the general consensus is the Fed is going to significantly cut rates next year. And I'm still thinking to myself, wait a second, there's a history of the Fed cutting rates too early and inflation actually coming back.
That's why I really don't expect Powell to be that dovish in his presser tomorrow, because the market has pretty much done a lot of this work for him. He's likely to be more measured because he doesn't want traders to get too excited. We've already seen such a loosening in financial conditions, especially when you look at these moves in the bond market.
It almost seems like it would be ideal if he just didn't even hold a press conference tomorrow.
Don't say anything.
We could just all go home.
I mean, what can he say at this point? I mean, honestly, I think in all seriousness, it gets to this idea though too, like everyone's betting on rate cuts, and even Powell has kind of hinted at this idea that at some point you're going to have to start normalizing the Fed funds rate to sort of match where we are in terms of market conditions as well as inflationary conditions. So that does mean, in theory, you're going to get a rate cut. Just not going to get 4 or 5 of them. But what's the advantage of him actually saying that?
Well, he's got to talk about something because they're coming out with new economic projections. So that's fodder for someone to say something.
I have a question. When they came up with that dot
dots.
plot, do you?
Yeah, I love the dot plot.
Oh,
yeah.
Okay. All right.
Yeah,
Sorry. Ignore Tim for 1 second. I'm trying to talk to Scarlett for a second. So, but in all seriousness, I mean, the dots. I mean, every time they do this, and remember the last time they released it, there was so much dispersion in those dots because there's no consensus. At least when you go past, a couple of months here, I mean, it doesn't seem like anyone on the Fed knows.
It's a moment in time. It's what people are thinking at the moment based on what they've seen up until that point. And Powell himself had said that once you get farther out from those dots, the forecast, maybe the first month it's relevant, and after that it no longer is relevant.
Right, we have no idea what's going to happen in the economy. I think the difference between now and when we last got the dot plot is so much data coming in that shows that we actually are seeing a softening of the economy and a so-called, kind of the perfect conditions for a soft landing. So do you think we'll still continue to see a big dispersion like we saw last time, or we see more consensus, guys, that the Federal Reserve officials actually agree as to when the Fed will start moving rates lower?
Or people be really cautious and not want to signal too much by changing up their forecasts.
All right, we'll find out tomorrow. That's
why was it dots instead of dashes?
I don't have the answer to that. I'll look into it. I'll get back to you about it, okay?
You do that,
And
please.
also, if you're watching or listening and you know the answer to that, let us know. That goes for folks on the Fed as well, if you're not too busy. Hey, that does it for Beyond the Bell. Right now, it's our cross-platform coverage of the market close on Bloomberg TV, on Bloomberg Radio, Bloomberg Originals, and YouTube. Meantime, catch us same time, same place tomorrow. is a busy week, Emily.
There's a lot going on.
Yeah.
I'm actually more excited now.
You should be. It's a really exciting week. I think you make a really good point earlier about retail sales. That's post Fed, past the Fed. That's what certainly to keep an eye on. Hey, speaking of the economy, different ends of the economy, certainly. A story in the Wall Street Journal a few weeks ago, it really caught my eye. I sent it off to Paul Brennan, our producer. I said, we got to get Citizens Bank, Citizens Financial Group, back on the show because it's all about how Citizens Financial Group has opened a new private bank for wealthy customers, and it's actually taking a page from the book of First Republic Bank. That's right, First Republic Bank. It's the bank that failed back in May, but one that was known for high-end customer service. It was known for those really, really low mortgage rates over the last few years, and that's certainly what got it in trouble. We've got a lot to get to with Brendan Coughlin, Vice Chairman and Head of Consumer Banking at Citizens Financial Group. He joins us here in the Bloomberg Interactive Broker Studio. Brendan, good to have you with us. How are you?
Thanks for having me. I'm doing great. Thanks.
So when I saw that story, I thought, this is great because that means we're all going to get low mortgage rates again, just like First Republic did for so long. But that's not necessarily the case with kind of what you guys are doing over at Citizens, right?
Yeah, it's not.
Okay, too bad.
It's too bad. Look,
high mortgage rates are here to stay.
We are on a journey as an organization to really build out a world-class franchise. We went public back in 2014, and we viewed this as the next natural step.
And what you're doing is you're actually hiring a lot of people who were at First Republic.
We are. We've hired about 200 people so far, and with the bank failures in March, it became very clear to us that while those firms would no longer exist, there was a lot of talent in play, and there was white space open in the private banking sector in the United States for a service-led firm to come in. And so we brought on a lot of folks. We're building a high-end private bank here at Citizens. We've made no secret about it that we aspire to build a great wealth management platform. And what we aspire to do is really take the best of some of the firms that are not around anymore. Your point around the service culture is really distinctive and unique, but we are making business model corrections. We're going to be highly competitive on lending, but we will be market competitive. We will not undercut the market. We're going to have really great credit quality, and we're going to grow at the pace of raising quality deposits. So we build a really durable strategy, but it will be all grounded in high-end, intense service that's uncommon in financial services for that client base.
What do you currently make of the state of the consumer? Because we read a lot about how inflation actually hurts the lower end of the consumer the most, and these higher income individuals are perhaps more shielded from the macro environment and higher inflation. Was that at all part of the decision to cater towards this client?
Well, the economy's not being felt the same way across all demographics. The bottom, 2 or 3 deciles of the economy's back to paycheck to paycheck. The average consumer is still buoyed by all the COVID stimulus. We still see consumers with 10 to 15% more in their deposit account than prior to COVID, and their underlying delinquency still it's starting to burn
10
down.
10 to 15% more?
It is, and it's slowly but surely burning down, but spending remains high, but excess deposits are still out there in the banking system, and delinquency rates, while they're almost back to normal, they're still lower. So when I look at the overall health of the economy, and I heard you mention potentially a soft landing, if you make that case, I think you could support it by the health of the consumer really buoying the economy, because they are in a position of real strength, even though the economy's not felt the same all the way through every segment. But it is true that the higher end of the market has significant strength and a lot of resilience right now. And I think with the disruption in the space with First Republic and SVB exiting the market, we do believe there's a lot of white space for innovation and banks to step up and re-provide that service level for really part of the economy that is still very, very strong.
What do you envision being that service level? Because there's no shortage of folks who want to manage money out there. Trust me, we have them on our program every single day. We never run out of them. So like, where are you seeing the white space?
The beauty of the market of the business model is actually quite simple. It's to bigger banks that tend to have great capabilities and very sophisticated capabilities, also are very big and they're siloed. And so the beauty of those models is that it broke down all the silos and you had a single point of contact that really brought the full breadth of the bank, and they valued your full relationship if you were doing a multifamily commercial real estate deal, or if you're bringing your wealth management, or you're doing deposit banking, or if you're part of the private equity and venture community. All of those parts of your relationship were integrated together as one, and the appropriate service was delivered back in spades to the client. client. So that's what we aim to replicate, and we've got tremendous feedback. The clients so far have been saying, hey, look, the brand that we're voting with is the brand of our banker. You now employ our banker. We're all in because we know what that person has been able to deliver.
So those individuals you were hiring from First Republic are actually bringing over clients.
The clients are calling us, and they're saying, we want to recreate that magic that we felt in the service intensity that existed there.
Explain the relationship with J.P. Morgan and how, can people jump, or they get hired if they didn't get laid off during the acquisition? That J.P. Morgan took over the assets, of course. Then can they just leave? Like, how does it work?
We're not intentionally calling anybody at J.P. Morgan, but employees get to choose where they work for every morning, and we're building out a world-class private bank, and we've hired folks from a lot of different places. But where we have open positions and there are folks that want to change brands, we're up for interviewing them, and we're open for business. And in an economy, and banks are obviously playing a lot of defense right now, making sure the deposit book is clean, the commercial real estate business is clean. This is one space where we're playing a lot of offense. We're going to hire, we're trying to reposition the company, and we think there's white space out there. And so some of the best bankers in the United States thus far have voted with their feet and selected in New Jersey.
Is the current regulatory environment helping you guys play offense, or is it a bit of a hurdle?
Yeah, I think the regulatory environment, obviously coming off the heels of a crisis like the bank failures, can tend to react pretty strongly, and that's what I think we're all predicting. And my worry is the unintended consequences and the cumulative impact of the regulatory action. So you've got the Fed taking a lot of money out of the banking system. That triggers banks to be less confident in lending. You've got potential liquidity regulation coming to value deposits in different ways. That potentially triggers less lending. And you have Basel III endgame to make banks hold more capital against particular parts of lending. That triggers less lending. So I am worried about the cumulative impact of this, that banks may be less willing to put more capital in the market, and it could actually be a negative force around a soft landing. So we'll see. Time will tell, but certainly there's a lot of regulatory activity going on now.
Brendan, how does... Oh, go ahead. Yeah, exactly.
We say that word all the time.
I mean, that's your world over and over again, Emily.
Exactly.
Brendan, how do you think about the physical branch in this day and age? I mean, you guys are relatively limited with your geographical footprint because you're only in 11 states right now, but you do have 1,000 branches, so it's a big footprint in 11 states. How are you thinking about changing geographically as you do this?
Yeah, there's been a conversation in the market for 2 decades about the death of the retail branch. And look, if you can get through a global pandemic where people were not willing to leave their house to do much of anything, let alone walk into a branch, and you reemerge an economy that people still value retail banking, I would say the U.S. consumer is voting with their feet that branch banking is still very valued part of how they think about financial services. Now, if you look at Gen Z, they'll tell you they have no interest to go to a bank branch, but they actually won't open an account unless there's a physical location in your MSA. So it's viewed as a safety net, and they don't actually want to go there, but they need the capacity.
Does that mean you're growing beyond the 11 states that you're in right now?
We are. We're a national bank now. We just bought HSBC's U.S. franchise. We bought Investors Bank. That put us in New York City. It put us in northern New Jersey. Put us in Washington, D.C. It put us in southern Florida. So we're now up to about 15 states in retail banking. We're open for business nationally with a national digital bank called Citizens Access. So digital is pervasive through service in retail banking. It's the combination of digital and physical banking that really consumers value.
Well, really cool stuff. Thanks so much for stopping by.
Thanks for having me.
So much has changed in the banking industry in just a few months. I mean, just think, it was this year that we saw the regional bank crisis, and here we are, and close to the end of the year, and so many changes. Brendan Coughlin, Vice Chair and Head of Consumer Banking at Citizens Financial Group, joining us here in the Bloomberg Interactive Brokers Studio. You are watching Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. We are awaiting remarks from President Biden and Ukrainian President Vladimir Zelensky. We will take you to the White House as soon as they begin speaking. We're also awaiting the latest numbers out of Adobe. Once that hits the Bloomberg, I will pass those along to you. Turned out to be an up day, not just an up day, but the S&P did close at the best level of the day today, up 21 points. S&P right now at 46.43, a gain today of 0.5%. Small moves for the U.S. stock market. Dow Jones Industrial Average up 173. That was a gain of almost 5%. NASDAQ, the composite index, up 100 points today, up by about 0.7%. 10-year yield 4.20% with a 2-year 4.72%. Spot gold lower, little change, down 0.1%, $19.79 the ounce. And West Texas Intermediate crude dropped 3.5%, 68.81 a barrel on WTI. Again, awaiting the latest numbers out of Adobe. Wall Street higher today ahead of the Fed decision tomorrow. S&P up 21, a gain of 0.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Hey, we're expecting to hear a joint press conference from Ukrainian President Volodymyr Zelensky and President Biden. They're going to be speaking from the East Room of the White House, and we're going to bring it to you live when they do start. That is expected in this hour. In the meantime, it is another time for another edition of Bloomberg Plugged In. It's your weekly look at EVs. We got big news out of the world of EVs today. Our own auto reporter Keith Naughton reporting today that Ford cutting 2024 production goals in half for its F-150 Lightning plug-in pickup truck. Its signature EV. This is the thing that, just a year ago was so popular. This just slowing demand for battery-powered models. The move does come as Ford scales back spending on EVs by $12 billion. Also, we've talked about this quite a bit over the last few weeks. The company downsized by nearly half a battery factory that it's building in Michigan. Here to talk about this and more is Ed Ludlow. He's the co-host of Bloomberg Technology on Bloomberg TV. Ed, I got to tell you, it seems to be a pattern over the last few weeks when we're talking about these downwardly revised goals when it comes to these American EV makers. What's going on here?
Well, in Ford's case, they're being honest. It's them cutting the number of electric vehicles that they plan to make in 2024 based on what they think demand is going to be. Structurally and mechanically, you have to remember that Ford has just been through the UAW strike process. And ironically, even though the strike was disruptive to production, the net result was that they ended up with higher inventory of pickups, particularly battery electric trucks, that they expected. But in that time, sales broadly for pickups have really dropped off. So they're left with too many and they're paring back. The real terms impact of what the news you just read out is that right now they're building 3,200 Lightnings a week. Next year, they'll average 1,600 a week. So when you put it in those terms, it's kind of dramatic. And it's a story about consumer demand that's becoming a bit more clear.
What's the price? So I know a lot of this has to do with price, but we thought, over the last couple of years that EVs were going to be, it was going to be more of a straight line than it was sort of up and down like we're seeing, Ed. Since this has to do with price, how much more expensive is an F-150 Lightning than an internal combustion powered F-150?
Well, getting closer to parity. I mean, the other way I would think about it is the cost of an F-150 Lightning relative to the cost of, say, a Rivian R1T or a Tesla Cybertruck. And the reason that I say that, other than a sort of a combustion engine pickup, is that we're talking about the first adopter or early adopter theory. The demand in the market from those people, like folks out here in California, that are more inclined to buy an electric vehicle at a higher price point, it seems now definitively that those have been and gone. So the addressable market you're going after is the non-traditional buyer of EVs, people that are sort of less motivated by environmental factors in buying an EV, or they hold on to range anxiety and things like that.
Ed, there was a UBS note that estimates that EV sales growth in the U.S. is going to slow to 11% next year from an estimated 47% growth rate this year.
Yeah.
To what extent are these expectations of a slowdown already baked into the market prices of a company like Ford?
Well, Ford is also going through a transition from combustion engine to electric vehicle, right? The kind of EV proxy that we go to is Tesla, and I thought it was really interesting that Tesla shares were under pressure following that Ford news. You know, Tesla has still maintained its target for this year of 1.8 million vehicles at a 50% annual growth rate. And to go back to Tim's question on price, the problem being that, you know, the average selling price of an F-150 Lightning is around $65,000. When Tesla announced the Cybertruck, the cheapest version is around $61,000, but it's not available to 2025. And so you're also faced with the idea that if a consumer's under pressure, what the market is still offering at the moment is that EV being more expensive. There's a premium relative to a combustion engine car.
I mean, it's a big premium at this point, especially when interest rates are high and it costs so much more to finance a car than it did a couple of years ago. I'm looking at Ford Mavericks, for example. These are incredibly popular pickups, Ed. $25K for MSRP. I mean, I don't know if you can actually find one for $25K. I think they're pretty hard to come by right now. But what does it tell you that we're at a moment in 2023 where we're seeing such demand for gas-powered versions of cars that they essentially have EVs for?
So this is what I was getting at earlier, Tim. You can compare the F-150 Lightning with Rivian's R1T, the coming GM battery electric pickups. But you are right that you also have to compare them with the broader pickup market, the combustion engine pickups. Inventories on pickups are at historical highs, and overall auto sales growth is just tapered off. So there's big inventory there. But again, go back to that price comparison and the premium. The early adopter of an EV is willing to pay $65,000 for a battery electric car with an electric powertrain. The average American consumer, under the pressure of higher rates, because your car is your most expensive outgoing after your rent or your mortgage payment, right, normally. And so it's a big cost consideration at the moment. And that early adopter packet in the corner of the market seems to have gone.
Can you give us a little more details on these long-awaited battery guidance from the Biden administration that was published and how it shapes out for the U.S.?
Well, okay, so when it comes to battery, content is key. And what we have to realize is that the impacts of the Inflation Reduction Act didn't happen overnight. There is still a lot of racing to build up our capacity for battery supply in this country, in North America and the United States, because unit economics are at play. The higher the volume of production of battery cells, that goes some way towards lowering the cost. Those rules were important because some of the main movers and shakers in this space are Chinese. And so what it did under those rules was set a limit that a foreign entity can only have 25% maximum Chinese ownership in any part of the battery supply chain before it becomes a foreign entity of concern. And if your end EV has any component or raw material that touches a company along that supply chain where Chinese ownership is greater than 25%, it does not qualify for the federal tax credit that goes towards the consumer EV. And that's what it comes down to. If that $7,500 tax credit evaporates, suddenly your product is much less attractive. And the idea is to make those cars that are more domestically or thoroughly domestically manufactured more competitive against an imported product.
Ed, explain the innovation that's actually happening in the battery space, whether that has to do with technology, software, or actual materials that are mined from the ground, because we're talking finite resources here, just like oil, that go into the development of a battery.
Well, yes and no. Finite resources to a certain extent. If you take lithium, for example, which is important in the basic raw material of a battery, the abundance of lithium is good. That is not a problem. It is the refining of that lithium and the capacity for refining that is the issue. And if you go back and look at Elon Musk's comments or Tesla's position on this, they have repeated time and again saying we don't need to get into lithium mining. What we need to do is keep a closer eye on lithium refining. The commentary of the most recent earnings from the legacy OEMs and EV makers is that if you look upstream in the battery, it's about making a more mature and established supply chain, as well as experimenting with the chemical composition of your battery cells. One interesting bit is that Cybertruck has Tesla's next-gen 4680 cells, right, which we know very little about, but they've been able to bring a Cybertruck to market, albeit at low volumes, with the estimate of 250,000 by 2025. If Tesla can make that many Cybertrucks in 2025, it could give you some confidence that their cutting-edge 4680 cell, which has a much higher energy density, is real, that it's actually here.
Have you driven that Cybertruck, Ed, just in 15 seconds?
I have to be completely honest, I have not driven it. As you know, I was there at the launch in 2019. I've been close to parked ones, and I've driven past one. But I keep asking Elon Musk, hey, let me get behind the wheel, and the answer so far has not been yes.
Okay, well, Elon, if you're listening, let Ed behind the wheel. Alexis Ohanian has one. Maybe he'll let you take it for a spin.
He has one, and I'm sure he won't mind me saying I've chatted to him about it, and he's absolutely thrilled with his Cybertruck.
Okay, so maybe head to Florida and go take it for a spin with Alexis Ohanian. Hey, Ed Ludlow, we love it when you join us for Bloomberg Plugged In. Check out Bloomberg Technology weekdays at noon Wall Street time. We are standing by, waiting to hear from President Zelensky of Ukraine and President Biden. They're going to be speaking from the East Room of the White House. We'll bring it to you live when they start to speak. Let's get to Nancy Lyons. She's also in Washington, D.C. with World and National News. Hey, Nance.
That's right. We are waiting to hear from President Biden and Ukrainian President Volodymyr Zelensky. This is following a day of talks on both Capitol Hill and at the White House. Zelensky came to the U.S. to plead for more Ukrainian aid, but Republicans continue to tie any aid package to substantive reforms along the U.S. border. To that end, CBS News is reporting that the Biden administration has signaled to lawmakers it would be willing to support a new border authority to expel migrants without asylum screenings and increase detention and deportations. While Congress battles over ways to improve southern border security, President Biden has ordered the Pentagon to release a $200 million military aid package to Ukraine. He spoke ahead of their afternoon meeting as Ukrainian President Zelensky sat across from him in the Oval Office. Biden saying he feels this is the right call.
The American people, Democrats and Republicans alike, I think, understand this, and they understand the very real fight that's going on right now.
This funding covers equipment from already existing U.S. stocks and brings the amount of U.S. aid to Ukraine to over $44 billion. UK lawmakers have been addressing immigration and today approved a Rwanda migration bill. It provides some relief for Prime Minister Rishi Sunak, who came under heavy criticism for the proposal that would deport asylum seekers to Rwanda. President Biden is warning Israel is losing international support as its war against Hamas in Gaza intensifies. While speaking to Democratic donors in Washington today, Biden described Prime Minister Benjamin Netanyahu's government as the most conservative in Israel's history and said the prime minister does not want a two-state solution to the country's conflict with Palestinians. Biden says Netanyahu has to strengthen and change his government to find a long-term solution. Global news 24 hours a day.
Thank you so much for that update, Nancy Lyons. Really do appreciate it. As I mentioned, we are expecting to hear a joint press conference from Ukrainian President Volodymyr Zelensky and President Biden. They will be speaking from the East Room of the White House in just a few minutes. I can see on the monitor that the folks are assembled. The press corps is assembled. We see Ukrainian flags with American flags, and we're just waiting on the two presidents. And we'll bring that to you live when we get it. In the meantime, as you all know, Ukrainian President Volodymyr Zelensky came to Congress to appeal for more aid to resist Russia's invasion. Republican leaders, though, told him to first wait for an elusive U.S. deal on immigration. The surge in migrants crossing the U.S.-Mexico border is emerging as a signature issue in next year's election. Voters ranking immigration their second most important concern just after the economy. Pressure to act is building as migrants tax the resources of big cities across the U.S. We've got with us Ellen Gilmer, senior Homeland Security reporter for Bloomberg Government. She joins us on the phone from Capitol Hill. Ellen, first, just give us an update on what we know about Zelensky's visit today, and then we'll talk about the dynamic playing out in Congress right now when it comes to this aid essentially being held hostage.
Sure. Well, the first takeaway from today's visit was that Republicans remain unswayed on their demands for border security policy changes in the U.S. as a contingency for passing any Ukraine aid. A lot of Republicans are on board with sending more aid to Ukraine, but they are not budging on their stance that it has to include a deal on immigration policy and border policy. And, just today, after President Zelensky was here at the Capitol, you saw the top senators who are involved in these conversations, plus White House officials, plus Homeland Security Secretary Mayorkas, and Senate leaders, like trying to hash out a deal. So the pressure is still on, and they're still working on it.
Ellen, is this deal to hold back the aid, is that the general consensus of establishment Republicans, people who've been there since, pre-Donald Trump, pre-MAGA, like those Mitch McConnells and, Mitt Romney's, for example? Or is this something of the new-ish members of the House and Senate who are the less establishment wing at this point?
Sure. I mean, I would say it's a little of both. It may have started with the more hardline conservatives, that the idea may have started with them, but the party has really, the Republican Party on Capitol Hill is really unified in embracing this strategy and this demand for addressing U.S. border needs. It is, you're hearing it from, senators like Mitt Romney, who generally might oppose kind of hardball tactics like this. So it really is universal at this point.
And what exactly are the Republicans looking for?
Well, it's a moving target. These negotiations are happening literally as we speak. So it's fluid, but Republicans want to see border policy changes that ultimately drastically reduce the flow of migrants into the U.S., reduce the number of illegal border crossings. So we're talking about stuff like limiting how asylum seekers can come to the border, narrowing eligibility for asylum, increasing immigrant detention, and any other measures that Republicans see as a major deterrent factor.
Ellen, what would be the catalyst for either party to actually move? I'm really curious, how does this actually play out in terms of making progress?
I think both parties do see Ukraine aid as a major catalyst, and that's why you're seeing these negotiations, as hard as they are and as fraught as they are. That's why you're seeing them advance. They've dragged out for many weeks now, but they wouldn't still be talking if both sides didn't see it as an imperative to send aid to Ukraine. So that is still what's clinched, would clinch a deal, but it remains, Republicans aren't going to budge on their demand for border security policy changes. So that's where things are stuck. And they don't see Democrats as open enough to the kind of changes that they are insisting on. What's the pushback from Democrats here? Because as you wrote in your story, voters rank immigration their second most important concern just after the economy. Don't Democrats understand that there is a serious issue at the border? You see a lot of acknowledgement of that from a lot of Democrats, and that is another reason they're at the table and so engaged on this. But at the end of the day, the proposals that are being traded back and forth, Democrats see Republican proposals as too extreme. Something like giving the president kind of unfettered authority to close the border to asylum seekers when that's needed to restore some kind of order, but leaving so much discretion to the president. A lot of Democrats are uncomfortable with doing that in the first place, but also they're concerned about what will happen if all of these changes to border policy are enacted, and then they're in the hands of a future Trump administration or a different administration that's very, very conservative and can use it to be overly restrictive or overly punitive at vulnerable immigrants. That would be the Democratic concern. What power does the president have, whether it is President Trump or President Biden, over the border? And what powers need to be granted by Congress in order for him or her to act? Well, the Department of Homeland Security has a ton of discretion to manage the border. And you saw, during COVID-19, starting in 2020, the president exercised authority that was called Title 42, and that was a public health order that essentially allowed border officials to turn away asylum seekers. What is on the table now is the idea of doing that absent a public health situation.
Can you break down a little bit more, what exactly do the Republicans want when it comes to solutions for the crisis at the border?
Sure. So the situation right now is a lot, it's the historic levels of migration across the hemisphere. A lot of migrants are coming into the country across the southern border and turning themselves into Border Patrol agents. A lot of those people then, some people are detained at immigrant detention centers. A lot of those people, though, are released into the U.S. while they pursue a claim for asylum or otherwise pursue long-term status in the U.S. The issue is the immigration courts are so backlogged. The process takes years. So they might be living in the U.S. for years before their case is decided. So Republicans want to stop that. They see that whole length of time people are able to stay in the U.S. as an incentive for people to cross illegally.
What about when it comes to actual barrier technology at the border? For years, we heard so much about President Trump's walls. You know, we know that he did not build walls to the extent that he said he would during his campaign. Do Republicans want to see a physical barrier along the entire stretch of the border?
Republicans would say they want to see a physical barrier across most of the border. There's places where they acknowledge it doesn't make sense, like steep mountains and stuff. So they say, you know, we're not saying it has to be sea to shining sea, but it needs to be strategic. And that does exist to some extent in parts of the border already, like you said. That is something they have pushed for. You know, Republicans included that in the House big border bill that they did earlier this year. But that's not going to be the main issue in these negotiations. Honestly, like for Democrats, agreeing to border infrastructure generally and border technology and border personnel is all a lot less controversial than changing the asylum system.
Ellen, to what extent is this being treated as a Homeland Security issue in the sense of, you know, the development of the Department of Homeland Security post 9/11 to keep the country safe from terrorists versus the way that I think a lot of mayors in big cities across the U.S. are dealing with it, which is much less about that type of safety and much more about a finite amount of resources, specifically money and person power to actually take in these migrants across the country.
Both of those, ways of looking at it are both very present in this negotiation, and it's really driving each side respectively. You know, you've got mostly Democratic mayors of large cities like New York, Chicago, Denver, saying to the administration, this isn't sustainable. All these migrants have dispersed from the border to our cities, and we don't have enough resources to care for them humanely. And that is putting a lot of pressure on Democrats, putting really some of the most pressure Democrats have felt to increase border security measures or border management measures. And then at the same time, you have Republicans who are citing those instances of cities saying that they are overwhelmed. But you also have Republicans saying, look, there have been more people crossing the border whose names might appear on the federal terrorist watch list. Not that all are terrorists, but that's a concern. That number is increasing a lot, and we should be concerned about our adversaries exploiting vulnerabilities or perceived vulnerabilities in our border to come into the country and do harm.
We're still waiting to hear that joint press conference. Is there anything specifically you're going to be looking out for between Zelensky and Biden?
I think the big question is how much President Biden directly engages with negotiations. At this point, we have top White House aides involved in the negotiations. And, you know, it's possible that the president decides to get more involved himself. If that happens, you know, that could really create some more momentum for action. But, you know, right now, like we talked about, there is a meeting happening right now with high-level people across the Senate and the White House and the Department of Homeland Security. And so we'll wait and see what comes out of that. And then I suppose at that point, the White House will make a choice on whether it needs to engage even further by sending in the president.
Does it seem like the president is hearing the mayors across the country, Ellen?
Yes. He can't not, right? You know, they've been very vocal about
They have, but, you know, I don't know to what extent it's a problem that the federal government can solve versus one that the states are responsible for.
I think that's a good point. I think at times we have seen the administration say, well, we hear you, you know, we have grant programs to help reimburse some of these costs cities are facing, et cetera. but we can only do so much. We really need Congress to pass comprehensive immigration reform. That's the refrain you hear all the time from the administration. You also have seen some administration officials get a little bit defensive and say, look, like, we've offered resources and advice, technical advice on how the cities could manage the situation better in their own jurisdictions. And, maybe they're not, they may or may not be taking it, but we're trying to give them the tools they need.
Ellen Gilmer, really appreciate you spending so much time with us this afternoon. I know you're super busy there on Capitol Hill. Ellen Gilmer, Senior Homeland Security Reporter for Bloomberg Government, joining us this afternoon on the phone from Capitol Hill. As I mentioned, we are expecting to hear a joint press conference from Ukrainian President Volodymyr Zelensky and President Joe Biden. They're going to be speaking from the East Room of the White House. What's scheduled for 4:15, but I don't have to tell you, this stuff never runs on time. We will, of course, bring it to you live when they do start. In the meantime, we got to check of business news, because even though we're after hours, still a lot of action. Let's get on over to Charlie Pellet for an update. Hey, Charlie.
Thank you very much, Tim. We do have the Dow, the S&P, NASDAQ all advancing today. CPI Tuesday ahead of a Fed Wednesday. Complete Fed coverage tomorrow on Bloomberg Radio. Yes, we get the decision 2 o'clock Wall Street time, and then Fed Chair Jay Powell's news conference. We'll have that for you at 2:30 p.m. Wall Street time. Today, Wall Street saw mild moves in the run-up to the Fed decision, with the latest inflation data reinforcing speculation policymakers will be in no rush to claim victory just yet. S&P up 21, a gain today of 0.5%. Dow Industrials up 173, up 0.5. NASDAQ up 100 points today, higher by 0.7%. 10-year yield 4.20%, with the 2-year 4.73%. Spot gold at $19.79 the ounce, lower today by 0.1%. And West Texas Intermediate crude down 1.5%, 68.81 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Really do appreciate it. As I mentioned, we are still standing by awaiting this joint press conference from Ukrainian President Volodymyr Zelensky and President Joe Biden. They're going to be speaking from the East Room of the White House. I'm looking at a live feed right now of the East Room of the White House. Everybody's seated, which usually means they're coming out soon. But I see no sign of the two presidents at this point, Emily Grafeo. So I want to go ahead and talk about another story that got my attention this afternoon.
Yeah, right. There's 2 podiums, but there's no people.
2 podiums, 0 presidents.
And
6 flags.
Right, 6 flags and a lot of people waiting.
Yeah. The poor White House press corps spends a lot of time waiting. I do not envy their job. Whether it's President Trump or President Biden, there's a lot of time waiting to actually hear, because those folks are pretty busy. Hey, I want to talk a little bit about this Apple story that I saw a little earlier from our own Mark Gurman about Apple tightening the passcode security when it comes to iPhones. Apple's adding a feature to iPhones to prevent thieves from gaining access to critical device data in the event that they actually know a user's passcode. So today, the company released the first beta test version of iOS 17.3. Have you downloaded it? Do you have an iPhone?
Oh my gosh, I'm really behind on the iOS. Every day it's like software upgrade.
You got to do it.
I'm so behind.
You got to do it for security.
3 years ago version.
Oh, that's not good. Don't say that on the radio. You're gonna get hacked now. This includes a new stolen device protection feature. So it's an enhancement that's going to require Face ID or Touch ID. No option to actually use a passcode when accessing stored passwords, changing Apple ID settings, looking at payment information, and disabling Find My Phone. This is so interesting.
This really is. And, we were talking earlier today about Johnson Controls, a $35 billion company facing a cyber attack. This is a huge issue, and I think one that people should really pay more attention to. So it is interesting that now Face ID and Touch ID, that'll be helpful for anyone that has trouble remembering their passwords.
Not just that, but this stems from a series of articles over the last couple of years that have shown that thieves have been able to essentially watch people in a bar, for example, enter their passcode, and with that 4 or 6 digit passcode, they've actually been able to steal the phone and take money from the person's bank, because a lot of people have banking on their phones.
Right.
And what happens when you don't actually have Face ID or the Face ID doesn't actually work for one of these apps? It oftentimes asks you to enter your 6-digit passcode.
Right.
If you're a thief with that 6-digit passcode, then you can then go ahead and access all of these critical apps that have people's data, that have people's money. And there's been really high-profile incidences of that happening. So this is one way that Apple's responding to this. Essentially what they're doing is requiring Face ID or Touch ID to access this critical parts of the phone. It'll also make it harder to wipe the device and resell it. Apple did not say when the new feature will roll out to all customers, but the company is planning to release iOS 17.3 publicly early next year.
Yeah, and I mean, this is also, pretty crucial for people. You talk about how thieves can physically watch you. If your password is 1111, the thief can see that and they can get in if they have your phone.
All right, well, as I mentioned, we are continuing to wait for a joint press conference from Ukrainian President Volodymyr Zelensky and President Joe Biden. They're going to be speaking to us from the White House in just a few minutes, at least that's what we think. I want to bring in Jeannie Shanzano. She's Bloomberg Politics contributor, and she joins us this afternoon. Jeannie, good to have you with us. What are you expecting to hear from the president of the U.S. and the president of Ukraine when we do finally hear from them in this joint press conference?
Yeah, it's going to be fascinating because, one thing we heard today from the Speaker of the House, Mike Johnson, was a real emphasis on if this funding was forthcoming, could Ukraine see victory in the end? In other words, what is the end game here? And I think, to my mind, we heard that more from the Speaker today than we have in the past. So in other words, it wasn't only about can we get funding and get an agreement on the border, it was also about how we would see victory in Ukraine and how this money would assist in that. And so I am really curious to hear, do they talk about that? And so that's one thing. Another thing I'm really curious to hear is, does the president make a case in particular about the benefits of this to the United States? We've heard not just from Republicans, but we've heard from Democrats as well, that, real concern about the billions of dollars spent over there and how that is assisting us in our vision, in line with what we hope to achieve as a nation, because of course people here are struggling at home and very concerned about the amount of foreign aid being spent. So I think those are the two things I want to hear.
Jeannie, you bring up a really good point, and you certainly hear that from, I think from sort of like the younger, more hardline conservatives that are more sort of, the quote unquote America First mentality, the ones who don't necessarily, I don't want to say they don't understand the role of the U.S. in the world, but they don't look at it the same way that other politicians have and that other Americans have in the past. What do you think, though, is a bigger deal, Jeannie? Is it that the aid could be held up because some Republicans don't actually believe that it's warranted to continue sending money to Ukraine? Or, like we were talking about earlier with our own Ellen Gilmer, of the senior Homeland Security reporter for Bloomberg Government, that aid being held hostage because Republicans want to see different moves from President Biden at the border?
I quite frankly think it's going to be both. And it's so fascinating what you just said, because earlier today on Bloomberg Radio, the interview that was done with Representative Jackson, a young Democratic representative from Illinois, he made a case that made him sound very much like the Republican voices we have heard on this issue of Ukraine. A real concern about spending money when people here at home are suffering and how that money is going to be used to our benefit. So to your point, I'm not sure which at this point is more critical. Obviously, to get this through Congress with Republicans, you're going to need to, the White House is going to need to give on the border. Democrats need to give on the border. And I think, quite frankly, politically, that would be to the benefit of Democrats. But also, we are hearing not just from Republicans, but increasingly Democrats, we want to know how this is going to benefit us. And one thing that Bloomberg has reported on so well is the amount of this money that is going back to U.S. companies and how that can benefit the defense sector in this country. So I'm curious to hear, Joe Biden has talked about that previously, if he talks about that today. I know there's not a lot of time when he's there with the president of Ukraine to make all these cases, but there's a whole lot that he's got to say to the American public to push Congress to get this over the finish line. I am not confident it gets done this month, but maybe in January we're hearing some representatives and senators say.
Jeannie, everything that the voters are going to be paying attention to come the 2024 election. Where does this issue stand?
It's such a good question because normally foreign policy plays very little into our votes as we go to vote in a presidential or an off-year election. The exceptions to that are when we see boots on the ground. Now, that said, given what's happened in Israel and the war with Hamas and what's happening, continuing to happen in Ukraine, we may see some more focus on foreign policy, but for the most part, it's not going to play as big as issues like security and the border or the economy and the pocketbook issues that normally are so important. And we'd add this year, of course, abortion. So it's usually very far down the list. Given so much going on, it may move up, but it probably won't play as big as the issues that all of us are confronting at home. And normally those issues dominate in these election years.
Yeah, Jeannie, you know, while we have you and we're continuing to wait for the two presidents, I do want to get your take on this because it's something I don't understand, and it's actually kind of rare that I get to speak to you about this stuff. You mentioned the economy. It is the most important issue for Americans. I think by many, many measures right now, the economy is very good. Inflation is coming down. Saw it again today with the CPI numbers. Unemployment is at 3.7%. The stock market is close to record highs right now. Why are Americans so unhappy about this economy?
Yeah, this is one of the perplexing problems. You know, I think one number that explains why people feel the way they do about the economy is something we were just hearing about in the last couple of days, which is mortgage rates. You know, the average mortgage rate, you know better than I do, it has doubled since 2021 when Joe Biden got into office. So for people thinking about the biggest, you know, cost for many of us is going to be housing, either mortgage or rent. Those numbers are really, really high. So while we talk an awful lot about inflation, we talk about the stock market, things are getting better. Certainly the job numbers are really, really strong and have been. I think that number helps explain. And should that get better? It absolutely